the job creation and the opportunities which are being created. It's such an innovative scheme. Actually, 500 companies will hire internship, and that will go into the CSR budget. That will really encourage a lot of companies to hire younger people and provide employment, which is actually absolutely the need of the hour. So in a way, I would say a lot is being done, and now it is left to investors and entrepreneurs to take the risk and do their ventures. Right? What can the government do beyond a point?
Right, Madhu, and you're smiling away, which makes me really believe that you're genuinely impressed by this budget. But if job creation is the focus for the next 5 to 10 years, and as an equity market participant, how would you play this employment boom? Would it be consumer stocks? Would it be auto stocks? Where would your bias lie if you're looking at investing in this market for the next 2 to 3 years?
I mean, I will not go one-on-one to honestly to look into opportunities because of A move or B move. Why? The reason why I'm smiling is because it is business as usual for us, right? We are back to, because, before the budget, there are lots of rumors which go on, this FNO will get this taxation, that taxation. There are a lot of things which go around the budget. Once the budget is passed, at least that it is life as usual. So I would say that it is back to really going to the drawing board and really being able to identify bottom-up opportunities which will arise from various sectors. At this point of time, I can't thumb the table and say that I will buy a particular sector or B particular sector. I will look for bottom-up opportunities. Within the sector, I will keep a 3 to 5 year horizon, and I will keep my return expectation as moderate, considering the fact that last 3 years we have made really extraordinary money. That the focus would also be to ensure that we don't extrapolate that kind of returns in our mind and make sure that we are investing with moderate return expectation and not what we have gained in the last 3-4 years.
Right. Saurabh, you want to comment on that as well? We've borrowed returns from the future, and that's a given with the kind of rally these markets have seen. It's a raging bull run, to say the least. There is a sense and quarters of the market, people like you, who do believe these are expensive markets and a correction is much overdue and maybe also healthy for the markets. Earnings have come our way. Most of them have at best met street expectations. Do you feel now is a good time to take some money off the table and then probably, come back with different vigor, but just wait it out for now, exit, take profits off, and then reinstate or reinvest those funds at a later stage?
Actually, it's a very interesting market. If you look at high quality companies, they actually haven't run up. So we're large investors in HDFC Bank, Asian Paints, and both stocks I think have given close to nil returns. Even companies, high quality companies which have done reasonably well, say a Titan or a Divi's Lab or a Dr. Lal PathLabs, they've had reasonable runs. I don't think there's been a blockbuster bull run in a Titan or a Divi's Lab or a Dr. Lal PathLabs. Where you've seen crazy rallies, utterly unjustified rallies in my view, is a whole bunch of PSU-related names, a whole bunch of power and infrastructure names. And there's clearly, those valuations are sort of from different planets. So there's two parts to the market. If you strip out the low-quality rally, if you strip out the rally in low-quality stocks, the Indian market actually is quite attractively valued. As I'm sure everybody watching knows, the HDFC Bank is trading at a 20-year low on PE multiples. Asian Paints is trading at its long-term PE multiple. So I think it's a good place to be. It's a good time to be buying quality. As I'm sure everybody also knows, we are invested in it through our PMS. I, as an individual, my parents, several thousand of our clients. And that's my point that I make to global investors as well. Strip out from India the low-quality stocks rally, and the Indian market is not expensive. The economy is in good shape. Take a long-term view on India, put money in India, put money in great Indian companies, and it will be in great shape for many years to come.
Saurabh, we'd have loved to chat with you longer, but I guess we'll have to wrap up on that note. We'll hopefully see you soon. Very quickly changing gears, we also have Dr. Ashutosh Raghuvanshi, MD and CEO of Fortis Healthcare, now joining in. Dr. Raghuvanshi, thank you very much for joining us today. Dr. Raghuvanshi, key takeaways from this budget, what stood out for you and what disappointed you?
For the healthcare sector, I think it was very disappointing. The fact that this budget did not include healthcare as a priority itself is something very disappointing. None of the long-standing demands have been addressed. The overall allocation, though, has been increased by about 12.5%. But that was on a low base. I think what is required is much higher. So those were the sort of negatives. I mean, there are few positives as well, and some of the custom duties on import of X-ray tubes, for example, will also help the local manufacturers to increase their production. Cancer drugs, there are only 3 cancer drugs, though, which have been included, but nevertheless, that is going to have an impact. Some of the other schemes which have been announced for the employment side on the internship and on the women's development, I think those would have indirect effect on the entire industry, and healthcare would also be included in that.
Raghuvanshi, I guess this is more of a long-term plan, right? If you create employment, you improve earning capacity for a large part of this country, which then, of course, enables them to go on and spend on healthcare if and when there is a need. But we'll talk about that in a minute. These 3 cancer drugs, which have got a little bit of a waiver on custom duty, how does it impact a company like yourself? And we don't know much about these cancer drugs, but if you can walk us through it, it'll be interesting to understand what it means for the healthcare sector, if it does at all.
Yeah, no, it definitely means a lot for the patients. And as you know, the cancer therapies are generally expensive. These 3 drugs are essentially imported, and hence they are even more expensive. There are no equivalents available in the country. And it would benefit the patients directly. But as far as the industry is concerned, it will not have an impact because these are mainly pass-through costs.
Right. Thank you, sir. Stay tuned. Of course, with us, we also have Mr. Rajan Bharti Mittal, past President FICCI and Vice Chairman at Bharti. Let me first come to you with regard to your 3 key takeaways, 3 key positives and 3 key negatives from the budget, which you found for this particular budget, 2024.
I think the 3 top things, if I were to say, manufacturing, especially the SMS and MSMEs have been taken care of, job employment and agriculture. I think any growth path that this country has to move towards Viksit Bharat, manufacturing and agriculture have to play a very, very key role. So I think that, I would say, is probably the top tier for us to say how this budget has been panned out. Of course, the Mudra scheme, the women empowerment, that also has been kept in mind. Especially manufacturing on the electronic side, that's heartwarming because I think India can become a manufacturing base more and more for the electrical electronics, which should happen now. All the PLI schemes have shown that the growth can happen in this country. So I think these are the good areas, of course, keeping in mind that fiscal prudence still be kept in mind. If I have to say that there is something which the industry, especially telecom industry, wanted, which has not been met this budget, and we hope that in future some course correction should happen, is on the telecom levies. We believe that telecom levies are far too outstretched. They need some rationalization over a period of time. Of course, the space industry has been spoken about, the small nuclear industry has been spoken about. We will have to see the fine print on that. Lastly, the finance minister spoke about the less of litigation and ease of doing business and taxation being part of that. That's I would say, a good note, and I hope that when we see the fine print, it starts working towards lesser and lesser litigation.
Mr. Mittal, I'm just going to ask you to step out of the telecom space and talk to me as an industry representative. There were lots of corridors in the industry that were expecting PLI schemes to be either extended or more sectors to be added, because this is one scheme that's actually worked really well in our country. And of course, there's also expectation that, that sunset clause for new manufacturing facilities would be extended. There has been nothing said on both those fronts. Is there a disappointment from the industry that none of these two clauses have been fulfilled? Because this is what you need to do to encourage private capex, right?
No, I fully agree. As I said, two sectors which have to add to the growth, agriculture and manufacturing. There is no doubt in my mind if GDP has to grow, India has already stretched on the services side. So these two pillars have to contribute. And my belief is, as we're going to see budget, 6-7 months down the road, the course correction will happen. Maybe more PLIs are added. But I think the government also wants to make sure that the PLIs which have been given to the manufacturing sectors are fully utilized. They are probably also going to be watching which all industries who have utilized the PLIs have functioned well, what course correction needs to be done. So I would say this would be a work in progress rather than saying that is come to its fruition either way. So we'll have to watch this space.
Good. Mr. Ashutosh, if I can come back to you, just with regard to healthcare, as well as expanding healthcare for all, what more needs to be done in coming budgets, maybe over the next 2 to 3 years? We've of course built a good base, but from here, where can we go?
Of healthcare in this country, which needs to be addressed parallelly, the public healthcare system and the private healthcare system. The private healthcare can never become a substitute for public health in the larger context of the nation. And there we would have expected that there were significantly more allocations made for the purpose of the Ayushman Bharat scheme and the digital health mission. There was no specific mention to those. On the other hand, as far as private healthcare industry is concerned, there are several aspects which need to be addressed, which have been long-standing demands of the healthcare sector. One of them is the rationalization of the GST structure, because it being exempt, we do not get any input credit. And that actually results in a higher costs for the patient. So that is very important factor which needs to be addressed. And there are also several other measures which the government can take to promote the infrastructure being created in tier 2 and tier 3 cities where the availability of adequate infrastructure is not there. And for that, certain schemes of PLI, etc., could be tailored, which the private sector can sort of catalyze and use them as basis to create further infrastructure in those areas.
All right. Thank you, Mr. Mittal. Thank you, Mr. Ashutosh, for all of those views coming through. We're having a conversation in parallel with Mr. Vijay Kedia as well. Let's quickly dip into that conversation. Tamanna having that conversation.
सबसे बड़े नाम सबने आकर कहा है कि वो इस बात से डिसअपॉइंटेड हैं कि लॉन्ग टर्म कैपिटल गेन्स टैक्स बढ़ाया गया. एफएनओ वाली एसटीटी से ज़्यादा परेशान नहीं लोग हैं, लेकिन इससे डिसअपॉइंटेड हैं. आप एक विजय केडिया बोल रहे हैं कि आपको इससे कोई फर्क नहीं पड़ता है. यू आर नॉट डिसअपॉइंटेड. डू यू वेलकम इट?
ऑफ कोर्स आई डू वेलकम. देखो, कंट्री जिंदा रहनी चाहिए मैडम. कंट्री जिंदा रहेगी तो शेयर बाजार जिंदा रहेगा. इकोनॉमी बढ़ती रहेगी तो शेयर बाजार बढ़ता रहेगा. शेयर बाजार बढ़ता रहेगा तो मेरी भी प्रगति होती रहेगी, मेरी भी वृद्धि होती रहेगी. मैं खाली अपने बारे में अगर सोचूं कि मेरे को टैक्स नहीं देने का है, तो ऐसा तो कैसे होएगा ना. फिर तो कंट्री बंद हो जाएगी. तो मैं इसके एकदम फेवर के अंदर हूँ. मेरे को लगता है कि 12.5% उन्होंने कम बढ़ाया है. अगर आप 15% भी, मैं तो सोचता था 20% करेंगे. मैं आपको सच बताता हूँ, मेरे मन में तो ऐसे लगता था कि बाकी जो दूसरी एसेट क्लासेस सब में 20% टैक्स का स्लैब है लॉन्ग टर्म का, तो क्यों नहीं करेगा. एक आपको एक एग्जाम्पल देता हूँ तमन्ना जी. कनाडा के अंदर में कोई कंपैरिजन नहीं है, कनाडा और हमारा कोई कंपैरिजन नहीं है, लेकिन खाली जो लोग बोलते हैं ना, कई लोग बोलते हैं कि दुनिया में कहीं ऐसा नहीं है. कनाडा में 50% टैक्स है मैडम, लॉन्ग टर्म कैपिटल गेन टैक्स 50% है. चलिए, अपना उनसे कोई कंपैरिजन नहीं है. आदमी क्या
कनाडा में हेल्थ केयर दे रहे हैं, आपको फीस नहीं भरनी है बच्चों की, आप बुढ़ापे में आपका ध्यान रखते हैं. यू रियली कांट कंपेयर विद कनाडा.
एग्जैक्टली वही मैं बोल रहा हूँ, कंपेयर नहीं कर सकते. तो आप ये भी सोचिए ना, 147 करोड़ आदमी के अंदर में फिर 1,69,000 आदमी 45%.
So that conversation happening, but let's quickly go across to N. Jayakumar, who's joining us, MD and Group CEO at Prime Securities. Mr. Jayakumar, talk to us. You were constructive on pharma, and just first give us your views with regard to the budget itself.
Any kind of disappointment about taxes, etc., is, I think, frankly, too small to even mention. The fact is, taxes have gone up a little bit, but those who are making the kind of money that they are making in the markets, if there is in some sense a redistribution of that wealth through the government, which means you pay higher taxes and the government then channelizes to a whole bunch of, whether it's social security, first-time employment program to generate employment in the country, addressing youths, I think it's an extremely noble way to do it. And I think the fact that it is finally tax on gains, let's not forget that it's on higher income or on income that you generate that you're paying this tax. So I personally have absolutely no balls to pick on this. We can go down to the fine print and to say that whether, for instance, buyback is the same as dividends, etc. Those may be fine prints that we need to wait for before the end of the day to get clarity on. But the fact that tax rates have been moved up slightly, I absolutely have no issues on this. It's a different matter that nobody expected it. But it doesn't mean that everything that you expect must come through. And let's be very clear, the markets have been very kind to a lot of people and to all the people who've done their SIPs, etc. So they have to pay 2.5%, which is a 25% higher taxation on long term and 15 going to 20 in the short run. I do not believe, I repeat, I do not believe it's a problem. I think the distribution of that in the hands from the government to the hands of the necessary and the needy, to the needy is absolutely necessary, because really what we must see is a far more inclusive growth than just South Bombay, South Delhi, and a few pockets making money as a result of market movement. I think this has to be more inclusive growth, and I think the foundation stones have been laid for it, whether in terms of a slew of these programs for first-time employers, for promoting employment amongst youths. Ultimately, you don't want the demographic dividend or the demographic boon to become a demographic bane if you can't give employment where it is needed. And to generate employment and to foster that, if any schemes have come through and it means that certain rungs of the population have to pay, I am absolutely okay with it. Number one. Number two, I think there's substantial emphasis on infrastructure. There's substantial emphasis on public investments, and they're hoping that the public sector investments, they're hoping the private sector also, keeps pace. I, for one, believe that the collections through taxation would be far higher than what have been the estimates in the budget. So overall, I'm very happy with the budget, largely because nothing much has been tinkered. And you could argue that the taxation increase could have been avoided, but I think a signaling had to be given that for more inclusive growth, different sections of the society need to contribute. And from that signaling perspective, I believe there's nothing wrong with this, and too much airtime and PRP has been spent by channels on the fine tune, on the fine print about taxation aspects and what the base, etc. is. That's something that we can always figure out later. But the broad direction about what this government wants to do in the next 5 years has been well laid out, and I'm delighted for it.
Right. We also have with us Motilal Oswal, MD and CEO Motilal Oswal Group, joining in. Hi, Mr. Oswal. This is Samina. Sorry to have kept you waiting, but it's just turning out to be a very busy afternoon. What have you made of the budget? Capital gains has been increased, but that translates into 35 basis points of gains, additional gains or earnings that an individual now needs to make to accommodate for that increase in capital gains. Are you impressed with the budget? The fiscal consolidation was better than expected. The budget did not tilt too much towards populism. And of course, it fixed the capital gain situation at a time when we're pretty much in a Goldilocks scenario.
Yeah, so if I have to, I think, summarize about the overall budget, I would say that there are very minimum changes overall. And of course, I think there's a fiscal discipline. Absolutely, numbers are far better budgeted, which is good for the country. And overall, I don't see really, I think, many changes really, except few changes on the capital market side. So capital market gains, short term, long term, and STT. Of course, I would call it absolutely that there can't be any gains without any pains. So it's a capital pain budget in that sense from long term, short term, and STT perspective. But I think it was more on the expected line. But I think more important will be that how the whole regulatory changes comes in next few weeks about the overall any new restrictions or any kind of new changes happens, the way the future and options, especially the volumes are happening. So market definitely would look forward to those changes, and these in any case more or less I think not big change, but to the extent really I think it is a change, and global investors, domestic investors would like to see the continuity of policy on this side. Because if you have to look at the overall, just the huge number of people are coming in, but still if you look at the percentage of household savings coming to the market is less than 5%. So if we want to encourage more and more people to come here and invest for long term, especially their savings, then definitely there should be stable policies, and there should be some kind of encouragements for the investors who actually invest for long term. I have nothing really to say about the STT on the future and option. That's okay, but I think for long term investors, especially capital gains tax, I wish they should not have any changes.
So, Mr. Oswal, just with regard to STT, I want to try and cap this tax angle off. Do you believe that this will dissuade investors from engaging in F&O? Do you, of course, you head and lead Motilal Oswal Group, and therefore maybe in the most relevant position to answer this.
Yeah.
It will, okay.
Yeah, it would, because the cost of transaction will definitely go up.
Right.
So in that sense, definitely it will make an impact, because people trade for very small gains or small amount of gains, and that's where it is going to impact them.
Right. And sir, do you believe on the policy side of things, enough has been done in this budget to push consumption?
No, I think the way things are happening, if I have to look at medium to long term, budget actually is becoming more a non-event, except few cosmetics, which is the right thing to do, because it brings predictability to the whole kind of, I think, policy environment. So I think really we are on the right time.
Mr. Jaikumar, I'll come to you now on what you made of the budget as a whole. While you did say that it's pretty much ticked all the boxes, from a portfolio standpoint, do you feel like it's back to business pretty much now, and the markets will have digested the change in capital gains, and of course the focus will be once again on earnings and fundamentals, and most importantly valuations, given how stretched we are right now?
You know, my budget take usually is budgets are nothing but a speed breaker on a highway. On a highway, you don't expect speed breakers, but if you do get it, you need to take the bump and move forward. I think in every which way the direction is clear, direction has already been laid out. I don't believe the budget has to that extent delivered anything dramatically different. Tinkering around here or there, you know, making changes in customs duties, etc. That's something that they do every year, which is digested well before even the markets shut. Sometimes you wait till the end of the day to read the fine print. So from my perspective, nothing much has changed. It's business, it's back to business as usual. We go back to trying to make investments, by reading balance sheets or understanding businesses. So the entire thing about, whether, for instance, the F&O trading will get impacted as a result of retail not participating, I certainly hope that that's what happens. People don't understand the risks associated with F&O. And to the extent they don't and they continue to participate, they've been losing money.
Right.
My own assessment is that anything that deters this. In fact, greater deterrence should have been put in place. And any F&O trading that needs to be done either needs to be done through professionally or through mutual funds who should be offering these schemes. So I don't, for one, have will lose my night's sleep on any of these. I think the right deterrents are in place, and more importantly, the direction that the government has laid out has not changed over the years and continues to be as robust. But it's far, far more inclusive than it's ever been, or at least the pronouncements are making it far more inclusive. We expressed similar sentiments when DBT, etc., came in. But the fact that direct benefit transfers have made the kind of difference through the JM, Tredi, etc., indicates clearly that this path with the government, giving to of going down the path of inclusivity, I think is a great step forward. And I, for one, welcome it. I mean, just look at the kind of social unrest in different parts of the world. I mean, clearly you don't want disparity to widen to such extents that this becomes something that the Indian folks also get to see. So given all that, I'm very happy with the budget, and I have, I think we'll move on to business as usual and speak less about the budget starting tomorrow.
Right. Jay, on that note, from the start of this year, it was all about Modi stocks, PSB. So railway, fertilizer, defense, expectations of big bang announcements coming in the budget once again for them. And those stocks have ran up. They've doubled down in the last 6 to 8 months. From where we stand today, and because it's back to business, would you still, were you ever overweight on these sectors? And if you were, would you remain overweight? Could PSBs continue to gain only on back of fundamentals from here on?
So I think the easy phase of the bull market is over. Now we need to go back to basics. We need to identify sectors that are materially benefiting. The fact that the overall market is a buy on dips still remains the thesis as we speak. The fact that the overall market still affords opportunities is true, but I think we need to be far more nimble in terms of the sectors we choose. And most importantly, it goes back to basics. So whether it's PSU stocks or non-PSU stocks, I think I don't want to talk stock specific, but sectorally, every sector affords opportunities that people should look at. So as I said, this is something I don't want to talk about, which is stocks. But am I bullish on the markets? Yes. And there are enough sectors and stocks that I kind of look forward to continuing to own over the next several years.
All right. Also have Gautam Trivedi joining us, founder, managing partner, Nepean Capital. Gautam, first off, welcome. It's how do you assess the budget?
Yeah, I actually like the budget, and frankly, the fact that it was not populist, strong emphasis on agricultural, rural, strong emphasis on infrastructure, urban housing, etc. So frankly, I like the budget. Okay, and what changes in terms of thesis yesterday versus today and going forward for the next 2 years in your view? Yeah, so I think the short-term capital gains tax being increased to 20% was indeed a surprise. There was a lot of chatter in the market about long-term capital gains tax being increased from 12 months to 36. That thankfully has not happened. I think a 10 to 12.5% or a 2.5% increase really is not going to move the needle. But the fact that they've kept it at 12 months actually is very good. And as far as short-term capital gains tax is concerned, I'm actually not too disappointed with that either, because that, in a sense, will bring down, hopefully, the speculation. That alone, of course, may not necessarily bring down all of the speculation, but the fact is the SEBI will have to bring in some other curbs and make sure that people don't get hurt, because there are a whole bunch of new investors from tier 3, tier 4 towns who are new to the equity markets, have never seen a correction, and you don't want these people to have a disastrous experience in the equity markets. So, staying course with what the SEBI chief has said over the past few weeks, that the incremental money coming into the equity market should be focused on not speculation, but investment. And I think if the SEBI does a bunch of things to control and curb the speculation, will be actually a big longer-term positive for the equity markets.
Gautam, what else do you make of the budget in this case in terms of impetus as far as consumption is concerned? We've been talking about weakness in rural demand. Do you think there anything changes at this point in time?
No, I think the government has stayed focused, and hats off to Prime Minister Modi for this, has stayed on course and focused on basically doing the basic things, which is housing, infrastructure rollout. Obviously, electrification is part of that infrastructure rollout, and job creation. So I think these are things which the government has been talking about and doing for the past 10 years, and they seem to be on that momentum. So I think from that standpoint, the market was not at all surprised that these were the core tenets of the budget. There were tweaks. I think, for example, the lack of indexation going forward on real estate has taken a lot of people by surprise. But my personal view is that is for legacy properties, does not impact future properties. I.e., if you were to buy an apartment today, let's say in Midtown Mumbai, and looking at selling it 5 or 10 years from now, I don't think that's going to be a concern. That's going to weigh on your mind on buying the property itself today. But if you've inherited a property or your grandfather bought something for 1 crore of rupees and the value of that today is 30 crores, as an example, so you have to then pay 12.5% on that 29 crores of capital gains. So those are issues for legacy properties, but not so much going forward.
Right, Gautam, interesting there, because we just did some quick math on that just before we came here. Yeah. And on that, just about 40 lakh rupees, if that was your cost of acquisition in 2002, then as of today, you're at a no profit, no loss in terms of tax. The tax cost is neutral if you sell your property at 3 crore. Of course, if the numbers change, this may also change. But basically, essentially, I think that the intention has been to keep parity in terms of the absolute tax amount that you're bearing, despite the 20% to 12.5% cut and despite indexation going away. And this is, of course, for real estate, gold, as well as non-financial assets. Of course, we'll try and dive deeper into that. But let me come back to Mr. Jayakumar, if I may. Mr. Jayakumar, talk to us about what you believe are the key misses in this budget, because you've spoken about so many positives. What's the possible 1 or 2 things which have been missed?
We do talk about divestments once in a while. We do, maybe greater clarity on that could have come through. Maybe there could have been some more measures on, steps taken for PLI, especially because your manufacturing thrust is so heavy that the PLI could have been looked at as a tool for getting there, because you then facilitate and foster domestic manufacturing. I think, especially in the context of employment creation, etc., this could have been definitely one further step taken. Other than that, my own assessment is there are a lot more things they want to do. They can do it outside the budget. So to expect a lot more than what has already been covered, maybe a little, uncharitable to them. So I'm, as I said, broadly okay. There are not too many misses from my perspective. 1 or 2 which I pointed out.
Gautam, the other big number from the budget is 4.9% fiscal deficit target, and with an aim to reduce this number further. But this comes with costs, right? Going down. Your assessment on this as well?
To Jake's point about the one point that I thought also stood out, which was I wouldn't use the word negative, but that we need to actually assess, the government needs to address, is the lack of divestment, privatization / asset monetization. And frankly, if you want to get from 5.1 to 4.9, 4.9 to 4.5, either your tax collections need to significantly go up, or you should be able to achieve a significant amount of divestment of PSUs. And unlike a lot of Western countries who don't have a portfolio of companies to monetize or sell, or land to monetize, we have in our country, the government of India has so many PSUs that they can sell, especially in a market where the valuations of these PSUs have gone up. The stock prices have gone up significantly, and we are in the middle of one of the biggest bull markets in the history of the world. So it's a little odd that the government has desisted from monetizing assets at this point of time. And frankly, if the government were to move in that direction, I'm sure a host of investment bankers, including Jayakumar here, would help them sell these assets at a significant profit, and which could further reduce the fiscal deficit.
All right, Gautam, stay with us, but I'm going to take a moment to thank Mr. Jayakumar for joining us and taking us through his views and insights as far as this budget is concerned. With that, we also slip into a short break and we come back with a lot more in just a bit. Stay tuned in.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple.
If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that'll help you move with the tide.
An unmissable trade.
If you want to be in the money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back. This, of course, is the special budget coverage we are getting you. Now, you've seen the Nifty. Of course, we saw a bit of a fall, but we've seen a full recovery now. So we're pretty much flat on the Nifty 50. We've in fact gone a bit into the green before just about coming back in the red. But of course, we have Gautam with us. But let me also welcome on board K.K. Mistry, chairperson and chairman rather, HDFC Life. So, Mr. Mistry, give us your first take with regard to the budget, please.
Well, in my view, the budget is very progressive when you look at it from a long-term point of view. There are many, many positive features of the budget, which I'll highlight. I think the one reason why the market reacted negatively initially was the capital gains tax increase. But I think that is something which the market will pull aside, and I think in the course of time, things will bounce back. Now, what are the positives of the budget? I think at the very beginning, I said that there would be 6 pillars around which the budget would revolve. The first will be growth, and we have seen enough enough items or enough indications in the budget that the growth momentum will continue. Whether it's in terms of infra spending at 11 lakh odd crores, 3.4% of GDP, and so many other measures which have been announced. Second, I had said in the beginning was employment generation and skilling. And I think that there has been so much of focus in the budget on employment generation and skilling. And in a country like India, where we have a young population, this is, to my mind, an extremely critical and an extremely important thing that needs to be done. There are many measures announced. There are incentives given to sectors which are job machines, which create jobs like infrastructure, housing. There are so many things which have been announced for the housing sector. You have 3 crore new houses under the PMA scheme. You have the CLSS scheme, which has been broadly talked about, and I'm sure the details will be in public domain in the not too distant future. And there are many other steps for the housing sector. Encouragement to the states to reduce the stamp duty rate. Then there is enough for consumption, to encourage consumption. There's more money kept in the hands of people. Standard deduction, for example, has been increased, and various other measures have been announced to put money in the hands of people. This will lead to more consumption. Consumption will lead to more demand, and demand will lead to manufacturers and service providers increasing their capacity and therefore being able to provide more, which in turn will create enough jobs on its own. Then there are incentives for the rural economy, agriculture, a number of measures to improve productivity in agriculture. Then there are measures for the manufacturing sector. And last but not the least, I think extremely important is fiscal discipline. And we've seen that there has been a consistent decrease in the fiscal deficit every time we look at the budget. This time the fiscal deficit is kept at 4.9% against the 5.1% which was mentioned in the interim budget, and for next year the target is brought down to 4.5%. So I think these are all extremely positive measures when you look at it from a medium to long term perspective.
Okay, KK Mistry with us. Sir, stay on with us. I just want to get a quick word from Mr. Anish Shah as well, FICCI President, who now joins us. Mr. Anand Goenka also with us. So we are getting a great panel of corporate voices on right now, even as we speak. Welcome, gentlemen, to NDTV Profit. So good to hear from you on what is a big, big day. Mr. Anish Shah, let me begin with you. A lot of push on employment generation, and some of it now becomes the responsibility of the private sector to take forward as well. I want to get your first take on that. The internship scheme, the incentives for hiring new employees. How do you look at all of that?
These are all steps in the right direction because the budget really focuses on short-term and long-term growth for the economy. The short-term comes in through various measures around consumption. The reduction in taxes at the income tax level is a positive in that aspect. And long-term through skilling, through infrastructure spend, capex spend. And it is right that the private sector has to now step up and partner with the government to drive this growth. This is also on the lines of the Viksit Bharat agenda that the government has laid out, and that is a very positive one because it really talks about Make in India and India being the manufacturing hub for the world. And these are all steps that are headed in that direction, and it is the government and private sector that has to partner, work closely together to make this happen.
I'll take a quick view from Anand Goenka as well. On the budget, what would you say, Mr. Goenka, was one positive surprise and one negative one?
I'd say one positive surprise was certainly the focus on skilling and job creation. That has been the need, and I think the fact that there's been so much of impetus and focus on that, that's extremely positive. I think one area that we hope to hear a little bit more on was on the PLI scheme, but I do also believe that there is a fair amount of the PLI could possibly run on its own, and there could be announcements separately over time. So that would have been nice to hear from the government on.
Okay, so PLI schemes leaves more to be desired. Mr. Anish Shah, just, not just on PLI schemes, not too much there, but the fact that capex didn't really move up post the interim budget, was that something that you were hoping for? Along with that, the 15% corporate tax rate sunset clause not being moved forward, were those a couple of things which I think were on your wish list and didn't come through?
So if I look at it overall, capex is still 3.4% of GDP. And I think the message is that private sector has to step up, which is in many ways a fair message. If I look at aspects overall in the budget, the focus on infrastructure, on roads, and the focus on skilling, I think all of that is positive in terms of an economic growth focused budget. And therefore, on balance, I would look at that as very positive.
So on balance, that is positive. You know, gentlemen, if you will allow me, I also want to get Mr. K.K. Mistry into the conversation. He's with us here as well. Mr. Mistry, great speaking to you after a while. Tamanna here. I'm trying to understand just from also specifically real estate sector point of view, has the back of the envelope calculation taken place yet in your office on what this perhaps means? The fact that indexation has been removed, but the long-term capital gains tax has come down. Some are seeing it as a negative for real estate sales. Some are seeing it as no real impact.
I don't think there is any impact at all, honestly. I think there is a lot which has been done for the housing sector. The increased number of new houses which will be built under the PMAY scheme, the CLSS benefit which will come through, the 10 lakh crore or the amount that will be spent, all that will come through. And as far as capital gains,
to ask questions, and we will try to take most of the questions in this press conference. Ma'am will directly answer your question without any preliminary statement. Over to ma'am. Over to question. Anybody? All question 71, please.
मैम तरुण फ्रॉम जी बिजनेस। मैम आपने आज के बजट में शॉर्ट टर्म कैपिटल गेन और लॉन्ग टर्म कैपिटल गेन दोनों के रेट्स को बढ़ाया है और रियल एस्टेट में आपने इंडेक्सेशन के बेनिफिट को ख़त्म किया है। तो मैम क्या हम माने कि जो इक्विटी है अब आप उसको बाकी एसेट्स क्लास के बराबर लाना चाह रहे हैं, इस वजह से आपने लॉन्ग टर्म कैपिटल गेन के टैक्स रेट को 10% से 12.5% किया 0.5% किया।
First of all, thank you very much for coming here. After having heard the budget, I chose not to make an opening statement because you've heard me almost for 1.5 hours, and I'm sure you have you're eager to know what is in the budget and also seek clarification. For your just for a matter of drawing your attention, we put up a single slide which has used the word employment as an acronym to capture that is everything in the budget. So each letter actually highlights the important points of the budget, and we can elaborate more on that a bit later, but employment captures everything to do with this budget, and I would like you to, for a moment, spend a time on it. And deriving from that, everything which has been said in the budget falls in place. But with that said, yes, your question is on the point there is we wanted to simplify the approach to taxation, also for the capital gains. One. Second, if anything, the average taxation actually has come down when we say it is 12.5%. Because we've worked out for each of the different asset classes, each varied with the indexation. I'll ask secretaries to elaborate on it. But the point that we brought it down from below the average to 12.5, which is the lowest if you can look at the last several years, encourages investment in the markets. With that said, I'll ask Somanathan or who is going to elaborate, Sanjay, on the specifics.
So you had there were I think two or more parts to your question. One was on real estate and gold and other assets. So earlier the rate was 20% with indexation. It has now been reduced to 12.5% without indexation. If you assume that the rate of return on real estate is typically above 10% per annum, and if you take inflation at about 4% per annum, the real rate of return was earlier, let's say, somewhere between 6 and 16% per annum in real estate. If it was 16%, 20% of 16% was being taxed. The effective rate was 16%. It has gone down to 12.5%. If the rate of return was 10% per annum nominal, it has also remained approximately the same at 12.5%. So actually there is either a reduction or no change in respect of the effective rate of tax on property and gold. Now, as regards the equity, yes, it has gone up from 10 to 12.5, but you'll also find that unlisted equity has gone down from 20 with indexation to 12.5 without indexation. Basically, we have a very, very simple, easy regime. All listed, all unlisted are at 12.5% long term. And all are at 20%, equities are at 20% and everything else is at applicable rate for short term. So yes, short term has gone up, and yes, long term has been rationalized. It has not necessarily gone up. And Sanjay, would you like to add anything?
One point I would like to add over here is that we also need to keep in mind as to the kind of people who are actually paying these taxes, the capital gains on the securities, the listed securities especially. And so over there, when we did this analysis for the year 22-23, we found that about 88% of the tax is actually coming from people who have an income of more than 15 lakh. 61% of that income is actually coming from people who have an income of more than 1 crore.
That is income on capital gains on this.
And we are all aware that otherwise, the standard rate is, about 30%. And for some it can go up to 39%. So this marginal, very small marginal increase is actually impacting only those, primarily those who have an income of more than 15 lakh rupees per year.
Okay, number 3.
On capital gains.
Ma'am, Timsi Jaipuria from CNBC TV 18. You announced a very lucrative new tax regime with changes in tax slabs. A lot of new changes are there in the income tax side, on the revenue side. And in the speech, you mentioned that revenue foregone will be around 29,000 crore rupees, whereas government will now try to mobilize around 30,000 crore rupees. What will be these revenue mobilization measures, and from where do you think this foregone revenue will be recovered? If you can highlight, where are you foregoing the revenue and where are you going to recoup this revenue from?
First of all, it is not just because we've mentioned it in this budget, but the attempt to widen the tax net is something which we've been repeatedly saying, that India's tax net will have to be widened, whether it is in the direct taxation or indirect. Second, there are also now the PSU dividends which are improving because their valuations have gone up really high. And their performance is also now substantially increased. So revenue mobilization is not just tax-based, you have non-tax revenue mobilizations which are also coming up. Then we had, for almost now 3 years, been talking about asset monetization, which is not selling of assets, but optimum utilization of those assets which are lying in the form of unutilized stadiums or land which is available with PSUs which can be utilized for better purposes. That's a third one. Fourth, you're also looking at generating resources from newer areas. So in all those, the revenue is going to be mobilized better, and as a result of which the revenue foregone will be now made up for, is our expectation. We've said that in the budget. In my speech itself, I mentioned it. And I'm sure there are secretaries who will want to add to it. Sanjay?
Ma'am, I'll give the details. 37,000 crore, 29,000 crore in direct taxes and 8,000 crore in indirect taxes. So 29,000 crore direct taxes primarily comprises of three taxes, which is the increase in the STT only on derivatives, which is only on futures and options. And secondly, the buyback tax, which is to be now done in the hands of the recipient. While on the one hand, it will rationalize the tax and be more equitous and fair, because those who should be paying the taxes, higher taxes, in the higher income groups, they will pay higher tax, and those who are in nil tax category or in lower tax category, they don't have to pay a tax or a lower tax. While it does that, at the same time, it does bring in some revenue also, about 4,000 crore, and remaining, about 15,000 crore should come, from the capital gains taxes. On the indirect taxes, we are losing, as I said, about 8,000 crore primarily on the reduction in duties, especially in gold. There is a huge reduction from 15% to 6%. And then there is revenue foregone because of the personal income tax rates and the standard deduction being allowed in the new tax regime.
280, please. Backside, please. Give the mic.
Good afternoon, ma'am. This is Surabhi from Business Today. Ma'am, the angel tax has been abolished, which is a very welcome move. But just wanted to understand that one of the things the angel tax was also doing was checking money laundering concerns. So could you explain how these will be taken care of now? Thank you.
Thank you very much, and I'm glad to hear it is welcome. You've been raising this issue, as with many others outside of media, also saying, are you considering it? Although it was introduced during the UPA government, and it was introduced in 2012. 2 years had passed, and since after that, when we came in, we tried keeping as a good governance principle, government being a continuum, the tax continued. Although we tried giving carve-outs for startups and also making it simpler, bringing parity for the non-resident Indians, the way in which they've been treated as opposed to the Indian investments and so on. Today we've announced that we will indeed remove it. Exactly the details, Sanjay, would you want to elaborate on it?
Yes, sure, ma'am. So we should be aware that this is actually a tax measure. It's not really a money laundering issue, but money laundering issue was being tackled through a tax measure. So first of all, I want to clarify that this tax, there are other provisions in the income tax itself, first of all, to find out the source of these funds. Number two, there is already, the Prevention of Money Laundering Act, which continues to be in existence. So if there is money which is being laundered, money being paid as a bribe or for use in other purposes for terrorism, etc., there are enough laws, including the Nyaya Sahita, Bharatiya Nyaya Sahita, and the Prevention of Money Laundering Act to take care of those issues. While on the other hand, now some genuine money for investment, actually there is this deterrent provision no longer exists, while provisions for money laundering remain, and they should be sufficient to cater to it.
I would add that there are also certain provisions of the Companies Act which can be invoked if there is deliberate undervaluation of shares. So there are other legal remedies. The balance here is between preventing money laundering but accidentally also preventing investment. So that balance is what we are seeking to get it right.
211. Backside. Yeah.
Hello, ma'am. Prakash Predashi from ET Now. My question is, will the increased STT be applicable from April 1 or prospective? And if from April 1, will there be retrospective tax calculation for the increased amount?
It's not retrospective. It is with effect from 1st of October 2024. So we are giving sufficient time for the exchanges and the people, who collect this tax to put their systems in place to be able to collect it. It's not retrospective, it is prospective.
13, 11, ठीक 11. 11.
Ma'am, Karishma here from Business Today. Ma'am, congratulations to you and everybody. Ma'am, my question is on this special assistance to Andhra Pradesh and Bihar. 15,000 crore is the number that you've given for Andhra Pradesh for this financial year. Is there further assistance that you are looking at, or is it going to be need-based in terms of the amount?
I've already mentioned in the budget speech that 15,000 crore is coming through the multilateral development assistance, which we borrow from the multilateral banks, whether it is World Bank or ADB or AIB, whatever. And I've also ended that paragraph by saying further assistance will also be extended.
There is no definitive amount?
No.
152.
मैम आलोक प्रियदर्शी फ्रॉम सीएनबीसी आवाज में मैम सवाल यही है कि जिस तरह से आप लोग न्यू टैक्स रिजीम को प्रमोट कर रहे हैं, इस बार भी आप लोगों ने स्लैब में चेंज किया, स्टैंडर्ड डिडक्शन बढ़ाया, तो ये मान के चलें कि न्यू टैक्स रिजीम के जरिए आप मिडिल क्लास को राहत देने की कोशिश की है इस बार। ओल्ड टैक्स रिजीम को लेकर क्या कोई सनसेट क्लॉज है? क्योंकि आपने कहा है कि जो इनकम टैक्स एक्ट है उसका हम लोग कंप्रेहेंसिव रिव्यू करेंगे, तो रिव्यू में क्या ये मान के चले कोई सनसेट टाइम आएगा ओल्ड टैक्स रिजीम को लेकर?
अभी मैं बोल नहीं सकती हूँ। जरूर हमारी इरादा ये है कि सिंपलर टैक्सेशन रजीम होना चाहिए, और सिंपल टैक्स रजीम की ओर अगर हम जा रहे हैं ये रिव्यू के द्वारा, वो ही हमारी मकसद होगा कि सिंपल कर दो। ओल्ड टैक्स रजीम को सिंपल करने के रास्ते पर ही ये नया टैक्स रजीम आया है। सनसेट होगा कि नहीं होगा वो अभी मैं बोल नहीं सकती हूँ, वो रिव्यू करने के बाद ही हम एक डिसीजन लेंगे।
और ये एक आंकड़ा मैं आपको दे दूं कि इस बार पिछली बार जो हमने परिवर्तन किए थे नई टैक्स प्रणाली में, तो 70% लोग अभी तक जो 4 करोड़ के लगभग हमारे पास में रिटर्न प्राप्त हुए हैं पिछले वर्ष के, 70% ने इसको प्रेफर किया है बनिस्बत की पुरानी प्रणाली को। तो बड़ी तेजी से लोग नई प्रणाली की ओर आकर्षित हो रहे हैं और हमारा यही प्रयास रहेगा।
Yes.
Ongoing period.
Not yet.
I mean, more returns are coming in.
Yes.
271.
Hi, ma'am. This is Sumit Chaturvedi, ET Now. Ma'am, the corporate tax for foreign companies has been slashed to 35%. I want to understand the broad intent of this intention behind this decision, and what kind of benefits to economy, increase in investment you are expecting.
You've, in your own question, answered it. We want more investment to come into this country. So that is why it has been brought down.
$95.
Just to add to that, there was a widened differential between foreign and domestic companies which arose after the tax cut in 2019. When the domestic rates were cut, the foreign rates were not cut. So there was a widening of the gap. With today's change, there is still a higher rate of tax for foreign companies, but it is not now disproportionately higher than domestic. And therefore, this is something where, according to the feedback received from industry, we expect more foreign companies to invest now that this regime is adjusted in this manner.
Good evening, ma'am. This is Pal Singh from Outlook Business. You have earmarked a significant allocation towards rural infrastructure today. So how much of a boost to consumption and overall demand are we expecting here from this allocation?
So it is difficult to quantify what would be the accretion to demand coming from. I mean, the obvious increase is whatever we have increased. But yes, would there be a multiplier? Probably yes. I think with the Awas Yojana Gramin and the Gram Sadak Yojana, these two do have a lot of multiplier effects as well. Traditionally, for capital expenditure, the multiplier has been calculated at somewhere around 2.5 to 3. In the Awas Yojana, it may be a little lower, but yes, there would be a substantial multiplier. I don't have a precise calculation.
But other than the Awas Yojana and Sadak Yojana, Gram Sadak Yojana, there's a major push towards the corridors. For instance, I mentioned in the context of Bihar, I mentioned in the context of Andhra, 2 corridors which are moving, one from Visakhapatnam to Chennai, the other moving from Hyderabad to Bangalore, Buxar, Purnia, and so on, and building of the Gaya node in the Amritsar to Kolkata are all towards building infrastructure in the rural areas in order that we attract more investment and enable transit of goods in those huge corridors. All these are essentially going to the rural areas in a big way. And therefore, it is not just through PM Awas Yojana and Sadak Yojana, but major investments in strengthening the corridors, building nodes, and therefore also in improving the rural infrastructure is happening.
11.
Ma'am, I'm Maria Shakir from NDTV and NDTV Profit. Congratulations for creating history today by becoming the only finance minister for having presented 7 consecutive budgets. Ma'am, my question to you is about the first-timer scheme, because as you said, that employment perhaps sums up the essence of this budget. Would there be more blueprint coming out as to how this first-timers scheme will be playing out, and what will be the role of private sector?
Just 1 minute. See, this Prime Minister's package that I announced has 5 different schemes. The first timers is, I would think, one of the very, very innovative initiative. So what we are doing there is to be able to provide first timers 1 whole month's salary as subsidy. And this will be put into their account as direct benefit transfer, but possibly in tranches. When an employer picks up a first timer, and this is through the EPFO that you get to know that they have paid their provident fund amounts, and therefore the first timer indicator that we are talking about will be established. So they can't just say one of the existing employee is a first timer and claim it. There are enough checks and balances in the system to make sure that indeed the first timer is coming in. And then the first timers will be put through that learning curve, and this will help them to acquire skills so that they become fully productive. This kind of a subsidy giving, 1, you give the first one month's salary. 2, you're also giving both for the employee and for the employer subsidy. So the applicable person for whom it is being given may even draw a wage up to 1 lakh rupees. But to the extent of 15,000 is what you're giving as a subsidy. The installments, as I said, for the first 1 month wage that you want to give will be done over 3 installments, direct into the first time employee's account. One compulsory measure that we are bringing in there is to make sure that the employee undergoes online financial literacy course before claiming the second installment from the government. So he may be a qualified engineer, he may be a diploma holder, he's a first time employee in an office, he becomes a first time employee and the employer also claims that he's been recruited. We try giving him the 15,000 rupees. He may have a salary of 1 lakh, but up to 15,000 rupees is what we are going to give. And in that, if you're giving 3 installments, the first installment will be given. But before he draws the second installment, he should undergo an online financial literacy course so that he can claim the second one. So we are not training him in engineering, we are training him in financial literacy. Post that, Of course, the place where he goes to work, he's going to be working in any case. Then subsidy to be refunded if in case the employer removes him from the work within 12 months. So the employer gets a subsidy as well, but he will have to refund it if within 12 months this first time employer has been removed out of the work. This will cover, and we expect it to cover, 1 crore persons per annum, and the scheme will run for 2 years. So up to 24 months you can have new employees brought in, new first time employees brought in, for whom the government will give 15,000 rupees as from our side 1 month, what we think 1 month's salary, although his salary may be any amount, but to a cap of 1 lakh, and then he undergoes some financial literacy course, post which the second installment and the third installments can be withdrawn, put into his account. But most important is, if the employer removes him within 12 months, the employer will have to refund the subsidy given to the employer. So that's how that scheme works.
278.
If I may just add, details are available in the budget speech in the annexure on page 31. So there are details of all the 5 schemes in this package. If you go through them, there's considerable amount of detail which you can get.
Hi, good evening. This is Priyashmita from Informist. I have 2 points from the budget that I would like to ask. The first is nominal GDP has been pegged at 10.5%, and we have seen that growth is on a high momentum, and even the RBI has pegged growth at 7.2%, and the Econ survey said that it is going to be between 6.5 to 7%. So a 10.5% nominal GDP looks a little conservative. What is your view on it? And the second is that there's a mention that beyond FY26, you would want to reduce your debt to GDP. And you've mentioned that, the 4% debt to GDP it's a thing of the past. So what do you think is a sustainable debt to GDP or a desirable debt to GDP at this point? Thank you.
What was the first question again?
Conservative nominal GDP projection.
See, 10.5% could be a combination of 7% growth and 3.5% GDP deflator. So a combination of wholesale price plus consumer price could easily be 3.5%. That's a very likely scenario. So 7 plus 3.5, yes, it is slightly conservative, but I don't think it is way off what is likely. Or it could be 6.5% growth and 4% inflation as per the deflator. So I think the number is reasonable, slightly conservative, yes, but we would prefer to achieve the numbers. Second, on the path after 26-27, which has been outlined in the Finance Minister's speech at the end of the Part A. So the commitment, as she has mentioned, is to endeavor to reduce the debt to GDP every year. That is in future the fiscal consolidation path. What is the percentage that would result in that fiscal consolidation is not something that we are disclosing here today or can disclose today. It will depend on circumstances, but there is a commitment to lower the debt to GDP ratio. So if every year it has to be reduced, there will necessarily have to be a particular level of deficit which we cannot exceed. And that will depend on prevailing growth rates, interest rates, and the other parameters which go into the calculation of the debt dynamics. But I can tell you that it is most likely to be a figure not above 4.5%.
249.
मैं सुनील सौरभ बोल रहा हूँ। मैं आप पहले तो आपको काफ़ी बधाई दे दूंगी, बहुत अच्छा बजट आपने पेश की है। दूसरा मुझे ये जानना है कि रेलवे के लिए क्या कुछ खास रहा बजट में?
Which organization you are from?
कौन सा पत्रिका से?
पेपर में हूँ, लोक भारती पेपर है।
सॉरी?
लोक भारती।
लोक भारती।
जी हाँ। तो पहले तो बधाई दे दिया हूँ मैं आपका, बहुत अच्छा बजट आपने पेश की है और रिकॉर्ड भी की है। 7 साल से लगातार आप वित्त मंत्री के रूप में काम। मेरा कहना है कि रेलवे के लिए क्या कुछ खास हुआ है, क्योंकि कोई जानकारी हम लोग को अभी तक नहीं मिली कि रेलवे के लिए क्या गया है। दूसरा, मैम, रेलवे में सीनियर सिटीजन्स को कंसेशन मिलता था। आप यहाँ पीआईयू में है, पीआईयू जर्नलिस्ट को भी कंसेशन मिलता था। कोरोना में वो बंद हो गया। कोरोना को ख़त्म हुए भी 2-3 साल हो गए हैं, तो फिर से ये बहाल नहीं हुआ। क्या इसकी उम्मीदें हम लोग कर सकते हैं कि आगे बहाल होगी या नहीं?
रेलवे का जो एक्सपेंडिचर बजट है नेक्स्ट ईयर, इट्स 255,393 crores, which is the highest ever, and it's a very substantial increase in recent years. So that is a very large amount of investment in the railway. So I think there is a very adequate provision.
जर्नलिस्ट के लिए कंसेशन
ठीक है, सुना।
277 प्लीज। इसमें सीनियर सिटीजन और पीआईबी जर्नलिस्ट को भी जो स्लैब में रिवीजन हुआ है उसमें फायदा है। सीनियर सिटीजन को फैमिली पेंशन में स्टैंडर्ड डिडक्शन का फायदा हुआ है रेलवे में। अच्छा ठीक।
हेलो मैम, दिस साइड हर्ष कुमार, दिस साइड फ्रॉम बिजनेस।
वो बजट का फायदा जो दिया है सर, वो भी तो मिलेगा सीनियर सिटीजन्स को और सबको, रेलवे में भी मिलेगा।
Hello ma'am, Harsh Kumar this side from Business Standard newspaper. So ma'am, during your speech you mentioned about the FDI liberalization. Can you give a bit detail about it?
We are trying to, since 2014, bring in ease of doing business in India, and in every sector where there was only 26% allowed for FTA, we raised it to 49, and then where it is possible we've raised it to 74, and so on. So there's been a consistent, continuing effort to relax our policy towards FTA. First it went sector by sector, then there was this approach taken so that most of which can go through the automatic route. So in that process, further simplification if necessary, we are willing to do, is what is conveyed.
Also ma'am, you have like increased the Mudra loan limit to 20 lakhs, like that cap. So can we expect the increase in Shishu, Tarun, like their types increase? So how much it will be? Can you give detail on that?
We've said this only today. See how this works.
Okay, thank you.
I request you to please one question each person. 123 please. Here.
Shrimi Chaudhary here from Business Standard. I just wanted to understand that budget proposes withdrawal of equalization levy. So if you could just give some explanation of what led to that, what is the intention behind that, keeping in mind the pact between India and US which has ended on June 30th.
No, as the Pillar 1, Pillar 2 negotiations have been going on since 22. And since then, one of the things which was becoming more than obvious was, if at all we are going through this Pillar 1 and Pillar 2, which we intend to, the negotiations and the OECD, backed by the US administration, have all been pushing for this. We wanted a fair solution, so negotiations have been going on. But the point of contention from then has always been, should we collect an equalization levy then, if at all we are getting into this global understanding through the Pillar 1 and Pillar 2. In any case, for India, equalization levy also meant for those who are living abroad that you were holding it, but eventually they're going to only adjust it somewhere. So in the interest of moving towards Pillar 1 and Pillar 2 solution, which the negotiations are still going on one aspect of it, on the other, in all probability, we are close to a conclusion. It was necessary for us, through the Parliament, to take steps to ensure that we are entering into that scheme of things without this equalization levy hanging on us, because this was important for us, but if it is a global system, this cannot continue. And therefore, with a positive approach towards the Pillar 1 and Pillar 2, we've moved forward to inform the Parliament that we would like to close this.
270.
I may clarify that it is only the 2% levy which has been withdrawn. The 6% levy which was earlier imposed, that continues.
What will happen to the tax collected so far from all these companies under this 2% utilization?
That has already been collected. We'll see. I mean, it is only this withdrawal is only prospective.
Ruchika from Business Standard this side. Ma'am, the miscellaneous capital receipts have seen an increase in this budget to almost 50,000 crore. Is there the miscellaneous capital receipts?
Okay.
Can you share the government's game plan as to how will we achieve this increase?
The miscellaneous capital receipts are budgeted as 50,000 crore, which was like 23-24 also it was 51,000 crore, the interim budget. Now it's 50,000 crore, 24-25, and this combines with all kinds of receipts which are otherwise disinvestment receipts, asset monetization receipts, and other kinds, which will be clubbed with that. So this budgeted figure is 50,000 crore.
Ma'am, very good evening. Sapna Das here from CNBC. Ma'am, two questions. On the incentive like employment scheme that you have announced, 2 lakh odd crore is your overall fiscal envelope over the duration of the scheme. Could you give us a sense as to, we are already almost halfway through the current financial year by the time you pass the budget. So practically around 7 months will remain for the financial year. But any kind of an allocation that you have done for this scheme for this year, ma'am? One is that. And ma'am, just a corollary also on the miscellaneous receipts question, though not very much part of this budget, but nevertheless, ma'am, government had a very, kind of a bold privatization program. Do we understand that this is now being calibrated? That's it, ma'am. Thank you.
First question. As you rightly observed, there are only this is not a full financial year. The schemes have just been announced. They will now go through a process of quick design, appraisal and approval. However, budget provisions have been made for these schemes, partly in the Ministry of Labour and Employment and partly in the Ministry of Corporate Affairs for the internship scheme. So from memory, I can be corrected. I think it's 2,000 crores has been provided for the internships in the Ministry of Corporate Affairs, and about 5,000 crores has been provided in the current year in the Ministry of Labour and Employment. But we stand committed to funding them fully to the extent that may actually be required. These are just very rough estimates based on how much time it might take to kick off. On the miscellaneous capital receipts?
Well, I think in the interim budget, FM had announced, we are going for a holistic strategy for management of equity in PSUs. And I think which includes, value creation and also, using the performance, the capex, the dividends and consistent dividend policy and the capital management all together, and also the calibrated disinvestment strategy, which also includes listing and market dilution, but all together in a holistic way so that value maximization is there. I think the same strategy is going to continue.
122.
Hi, Rishabh with NDTV Profit here. I have two questions. One on the space fund that was announced, the 1,000 crore fund. What will be the composition of this? Which will be the nodal agency, and what sort of startups will the government invest in? And on the NPS, you also mentioned that the NPS committee has made progress in the speech. Could you elaborate a bit on that?
So we have seen that there's a lot of interest of the private sector on participating in the space program. Hitherto, the participation used to be on being a supplier to the space program, but now development of the satellite, mounting experiments there, they're getting into that space. And if you recall, even FDI was opened up in that sector. This is an attempt that Indian entrepreneurs, Indian startup who want to risk capital to get into that area, that should be facilitated. We believe that the amount is 1,000 crore, but that can have a very large multiplier effect, and that's what the scheme announces.
On your question on the, I think your second question was on the government NPS, right? So, as you know, there is a committee which is looking into it. The committee has done a lot of detailed calculations of the fiscal implications of different ways of addressing what are the expressed sort of priorities of the employees. We have been in dialogue with state governments. We have had discussions with each and every state government. We have met the staff side of the government has a staff consultative machinery, a formal machinery. We've had 4 meetings of that machinery to understand what are the staff's priorities. And our attempt is to design something that is fiscally prudent, but also meets what are the core priorities of the staff in terms of having a secured retirement income, which provides for their needs. So this is a balancing act, because obviously there are costs. The more you give, more expensive it is. And so we are at an advanced stage of working out various options, and we are also discussing these options with the staff side. Just to correct the budget estimate that I gave earlier, 10,000 crores has been provided in Ministry of Labour and Employment for the new employment schemes, and 2,000 in Ministry of Corporate Affairs. Yeah.
125.
Good afternoon, I'm Nikunj from Reuters. A follow-up on that FDI facilitation, you said that government will take steps to facilitate FDI. The Eco Survey also yesterday said that the government should import capital from China so that there's a right balance between investments and trade. So will the government also take steps to quickly facilitate investments from China that have been pending for long? And secondly, you've come up with an NPS for minors. So will that also have some sort of tax benefits to nudge people to enroll for NPS so that a pension coverage increases? Thanks.
See, Economic Survey gave its view on the investments from China. As things stand today, investments do go through the Press Note 3 process when it comes from China or from any of our neighboring countries. So that process is still on. Economic Survey has indicated that it might be time for us to open up and allow for. So that's a Economic Survey. I'm glad that the Secretary is seated here. It's normally an arm's distance. But that doesn't mean that I'm disowning the suggestion. You want to say?
In general, as you can see, our aim is tax code simplification and not complication. So beyond that, I don't have anything specific on that. But the general direction of travel is obvious. We are not creating more and more tax deductions for individual tax instruments.
Respected Madam, मेरा नाम नरेश वत्स है और मैं स्वतंत्र पत्रकारिता करता हूं। आज जो आपने किसानों के लिए और ग्रामीण क्षेत्र के आधारभूत संरचना के लिए काम किया है, उस पे 2 तरह की राय आ रही है। एक राय तो ये कहती है कि गालिब ने ये कहकर तोड़ दी तस्बीह, क्यों गिनकर नाम लूं जो बिन मांगे बेशुमार देता है। एक वर्ग तो इस तरह से तारीफ बजट की कर रहा है, लेकिन दूसरी तरफ प्रतिपक्ष के नेता राहुल गांधी ने कहा है कि आंध्र प्रदेश और बिहार पर जो दरियादिली दिखाई है, कहीं न कहीं ये लगता है कि ये कुर्सी बचाने का बजट है। अखिलेश यादव जी भी ये कह रहे हैं, आप कैसे देखती हैं?
जिन इंडी अलायंस का मेंबर्स साथ होकर के भी 230 पार नहीं किया और जहां बीजेपी अकेला 240 तक पहुंचे और प्री इलेक्शन अलायंस के साथ आज सरकार तीसरी बार बनाए, प्रधानमंत्री जी का तीसरी बार स्वतंत्र भारत के चरित्र में पिछले 60 साल में जो नहीं हुआ अभी हुआ है। कुर्सी बचाने के बात करने वाले पार्टियों थोड़ा सोच ले। उनके अलायंस 230 कुल मिलाकर कितने पार्टियां थे? 25, 26 पता नहीं, मैं गिनी नहीं, बट इंडी 37 37 पार्टीज कुल मिलाकर के 230 पार नहीं किया, और वो बोल रहे हैं कुर्सी बचाने के लिए। जब प्रधानमंत्री मोदी जी तीसरी बार प्रधानमंत्री बने और देश के लिए इतना घोषणा भी कर रहे हैं जिससे भारत देश का हर राज्य सामने आए, डेवलप हुए, और 1.50 लाख करोड़ इस बार बजट में स्टेट्स के लिए हम दे रहे हैं बिना इंटरेस्ट 50 साल के लिए फ्री। फिनांस कमीशन तो हमारे उनके सजेशन में इसका जिक्र तक नहीं किए, हम ही कर रहे हैं स्टेट्स के साथ काम करने के लिए। हर स्टेट का उनके अपने अपने प्रोजेक्ट्स जो प्रोसेस के चलते हुए आता है उन सबको हम मानते हैं, और ज़रूर उनको जो फाइनेंस करना है वो हम करेंगे, मगर जिक्र इसलिए नहीं किया बजट में कुर्सी बचाने। जब उनका टोटल को एक और बार चुनावी सीट जो जीते हैं वो 101 और बार उसको गिनकर देख लें, 37 पार्टीज कुल मिलाकर के कुर्सी बचाने वाले बात बोलने का अर्हत अधिकार उनके पास नहीं होता है।
121.
Ma'am, Meghna Mittal from Money Control. In the union budget, you have announced financial support to MSMEs for shift to clean energy and also a new mechanism for credit so that they do not go into stress and they do not turn into NPAs. Any details on that?
I'm so glad you asked this question. I'm really glad because this budget, and I don't want to say it because I've presented it, I'm so grateful that the Prime Minister looks at every sector and says, what are we doing for them? What are we doing for? This has been his approach always. But this time around, we've spent a lot of time understanding also from those stakeholders who had consultation with us pre-budget. And MSME's request it has been for now several years that when they reach the SMA 1 stage itself, they get to be very, very tensed because banks stop their finances, meaning banks no longer lend to them. They are stressed as it is. And if they are stressed as it is, and if there is this threat that the bank will not further give them working capital, sooner, by the 90th day, they become NPAs. In order to give them a good workable solution, and I'm indeed grateful to this entire team of secretaries here, they spent a lot of time also talking with RBI to see how best we can address this issue. And RBI has also a very well established framework which we are quite respectful of, where banks are clearly given a bit of a margin to handle MSMEs at the SMA stage 1 itself, without pushing them to become SMA 2 stage, and then at the 90th day announce them as non-performing assets. So what actually has happened now, having discussed with the RBI, is that we'll provide them with a fund which will help them to have some kind of government guaranteed as liquidity, or the banks can then, on the basis of the guarantee being given, on the back of the guarantees which are being provided by the government, lend them working capital and keep them moving. And if they restore themselves, they're going to be better off. So on this principle, I'll certainly ask you or Wake to speak and explain it to you all.
As FM has already explained about the credit guarantee scheme, this will certainly facilitate the term loans without collateral or third-party guarantees. Then new assessment model for MSME credits, which will be based on their digital footprints and the kind of payments they are making, such as their PF contributions, salary payment, and other transactional data. This will help the banks in access to credit even during the stress period, for which some kind of support fund will be created, and based on the guarantee provided by that fund, they will be helped during the SMA 1, SMA 0 or SMA 2 periods. Then Mudra loans limit has been increased from 10 lakh to 20 lakh. Similarly, enhanced scope for mandatory onboarding in Tredi's platform has been also reduced from 500 crore to 250 crore of turnover. SIDBI will also open more branches in MSME sectors.
In short, what it does is for the MSMEs, through this one budget, we've announced 8 different steps, each one of them addressing this particular problems with MSMEs face, and for which the MSMEs during the stakeholder consultation wanted us to give them some solutions. So specifically 8 of them have been designed to address that.
I would just like to supplement 2 of the points. One is the credit guarantee scheme in the manufacturing sector of up to 100 crores for the acquisition of capital equipment, machinery, etc. So this is an idea which came from the MSMEs, as the Honorable Minister said, stating that typically MSME credit is for working capital, but they sometimes have needs to invest, and it could even be a new MSME enterprise which needs to invest in equipment. So the proposal in this scheme, which has also been discussed by a working group chaired by the Chief Economic Advisor with the Reserve Bank, with the credit guarantee institutions, is a self-financing mechanism. An MSME which wants to avail of a credit guarantee for this term loan will have to pay an initial upfront guarantee fee, followed by an annual top-up fee which will be based on the reducing balance of the loan. So there is no subsidy from the government which is envisaged in this scheme, unlike the CGTMSE, which is a working capital loan scheme where the government actually provides the corpus. In this case, the corpus itself will be self-financing, coming from pooling of MSMEs' upfront fees.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option.
Welcome, and you're watching a budget special coverage on NDTV Profit. You might miss Alex because it's the editor's cut, but I'm fronting it, and with me and 4 of my colleagues, we are going to try and tell you what the editor's take on this budget is. This is the top editorial team of NDTV Profit. With me, to my left, Sajid Mangat, to my right, Tamanna, Samina, and Muralidhar Swaminathan. Okay guys, let's try and set the basics of what stood out in this budget. Murli, you've had the most time off air, so let me start off with you.
Okay.
What did you make? What are the key takeaway for you?
Okay, so the most important takeaway is not about tax, it's not about capital gains tax, it's about the 5-year roadmap. Very clearly, that is what the agenda is. We should not look at it from what's going to happen now to your capital gains tax or real estate capital gains or income tax. Of course, there are benefits, but look at what is set for the next 5 years. That's what we need to look at, and that is where I think maybe the market is recognizing that. So you would be able to elaborate in the course of the conversation. 3 things stood out for me. One, very clearly, the agenda to create jobs. That's the top priority, not just now, over the next few years. Once you focus on creating jobs, your consumption will continue to grow. So in any case, we are going to be a consumption-led growth. And the message here is very clear. The capex has not been increased from 11.1 lakh crore. That's not been increased. All the focus is on jobs. The other focus is on welfare schemes. As far as jobs are concerned, there is a shift in strategy. In the past, you will say that I'll build a road, I'll create jobs. Now it's different. You are giving incentives to employers. Perhaps I think in recent years, Sajid might allude to this, we have never heard of incentives to employers for job creation. So that's a big shift. And then the welfare schemes that are being evolved are based on asset generation model. So these 2 things will help sustain the growth. For us, sustaining growth is going to be important. All the other things will follow later.
Okay. Now, we'll make this freewheeling, so everybody can come in whenever they want. But, okay, Samina, to you, what stood out for you?
I think this is the very first time, Neeraj, the economic survey was rightfully reflected in the budget. So it wasn't 2 different tales in so many words. Fiscal consolidation, the fact that they're going to be disciplined about this and do better than what they'd initially promised is a huge positive. Apart from that, I think the fact that they've kept the capex number unchanged, it's a direct message to the private sector saying it's now your time to do your job. We've done what we had to. It's now time that you play ball. And I think that stands out. So while employment is very, very important, the onus will be back on the private sector to do what's needed most, which is capex, hire more people, build the manufacturing. And I think one last one is the commitment to simplify the tax code. Again, a big standout, because if you've got to draw an FDI, we have to have a simple tax code. While the rates could have been tinkered with, simplification is a key positive.
Yeah, and I think in some sense, one good thing was that we know that the top 30 or the top 100 or 200 firms are doing the capex, which they have, green energy, etc. The bottom rung, the MSMEs are not. And in some sense, this ability to tell smaller companies that we are giving you incentives for employment, so on and so forth, let's see if that brings about some bit of capacity build-up or capex at that end, because that has thus far clearly been missing. Tamanna, your take.
That's exactly the point, right? The capacity building or the job growth is going to come in from the MSMEs and the mid-cap kind of companies, and not from the top companies here. Now the question is that whether they have that incentive to pick up that capex and go ahead. Do they have the capital to do that? That's the thing which we need to see now.
Also, just to add to that list, even Gift City, we didn't talk about this very much, but Gift City has been very significant to the government in order to bring all that foreign money in and localize everything. So creating jobs, pushing for growth, that could be an impetus for Gift City to go out there and hire people and expand that offering that is there.
Yeah, and there are points around the foreign companies as well, and we'll get to that. But Tamanna, yeah, the tax changes, but your initial take, Tamanna.
Okay, so I would say, and a bit of taking this opportunity to crow a bit about NDTV Profit's coverage, but if you had watched us in the run-up to the budget, a lot of what our experts said, a lot of what we said has come on those lines. And why am I saying that? So Manish Sabarwal, for example, when we talk about employment, and that's one of the foremost voices, comes and says that if you want to really create jobs, don't focus on those looking for jobs, focus on those giving the jobs. And if you look at what they've done in this budget, I will incentivize you if you hire more people. Correct. I will give you a subsidy on their PF. Okay, you have to hire interns for 12 months, pay 10% out of your CSR. I'm making it easier for you to give jobs. The other thing that we said, that any tax relief will come on the new tax regime. The Section 80C dreams we should forget about, and that's exactly what has happened. We also said that there will not be populist measures towards the rural economy as is being expected, and look at what they've talked about. They've talked about incentivizing farmers to have climate resistant crops, more R&D, etc. No huge outlays like were expected. I think the joker in the pack really, and which was something that we'd also said, was on capital gains tax. The long-term capital gains tax is going to pinch. The exact impact of it will be known in the next couple of days, whether it's on fixed assets like real estate, gold. The markets, in my view, will be fine. They will get a bit of a hit initially, but they'll learn to live with it because people have made money. So if you have to pay a little more in terms of tax, it's okay. It's something that will be swallowed and tolerated.
On the capital gains front, my view is that the promoters who are coming out with IPOs are not going to put in their shares in the IPOs now. They will wait for the stock to list before they exit the stock. Because the fact is that the indexation, the grandfathering which was available for unlisted stocks have been removed. So basically what happened in 2018 was that there was a grandfathering on the price at that point in time, and many of the unlisted companies were using that as one of the clause for to get a lower capital gains. Now that has been removed, which basically means that now they are taxed at full rate, which 20% for long term and 30% for long.
Private equity, which has been aggressively selling out, will now stay in.
You'll stay in till the.
So that's actually a good thing, right? Because
but then you have a lot of block deals and other stuff coming in because they will exit after
listing. This was for 2018, so private equity which has come in post 2018 doesn't have this benefit effectively.
Anyway,
you're talking about promoters who own the equity in the company before 2018, not incentivized to
so
do.
Maybe venture capitalists, right? Not even that much late stage private.
There are hardly
a lot of companies now get listed after 3 years or 4 years of operations. So all of those don't, but the
Neeraj, it's the pre-IPO phase anyway is not counted here. Yes. Private equity still comes in 3 to 4 years anyway out before a listing, right?
Exactly.
Also, just to quantify that capital gains increase, and Sunil Singhania said this, and I think there's merit in it. He said first, if you were gunning for 15% returns on your portfolio, by increasing your capital gains from 10 to 12.5%, the impact of that is 35 basis points on your returns. So now instead of saying I'll stay invested till I make 15%, my goalpost is 15.35%. So of course that's simplifying it too much.
On short term also there's a bump up.
Then that's the trader's money any which ways. It's not sticky.
Absolutely. I'll tell you my problem. Sorry, just one point here. I'll tell you the problem with this taxation. One, very simplistically, 12.5 is not a rounded number. I think in the first year of the budget, they have not come out and said, okay, we are doing it X% and Y%. Now this is the tax for the next 5 years. It is open. As of now, no comment about whether this is the end of it.
Yes,
I think the market may, in its wisdom, believe that this is a start. We do not know where it will end. I mean, for all the talk of tax and tariff predictability and continuity, this is the missing piece. I hope at some point of time in an interview, they clarify about whether this is it for the next 5 years or could there be more, because you don't want uncertainty. Even if they've done this, it would have been great if they had come and said it's 12.5 and 20 and for the next 4 years, we don't foresee any increase. At least there is some predictability. In this case, that predictability about taxation regime on capital gains is missing. I wish that comes in.
But to be fair, when the last time we tinkered on capital gains, we never said it's going to be there for 5 years.
Yeah.
So it was there.
So stable.
No government will do that.
No government has to promise I won't tax you more. You keep it for a longer period of time to assess how the capital gains
the
is
reason
working.
why this time it's important, sorry, I'll just spend 30 seconds more here. The reason why this is important, because now the market is in wisdom might want to believe that they want parity between all asset classes.
Exactly.
And equity taxation is still lower than some of the others. So will the market now fear that a higher tax is around the corner, could it impact global investments? That's the only.
No, I would like to answer this question. I would like to answer this question.
Just before that, Melissa, while that could be a fear, let's not forget that the markets were down 400 points when these announcements were coming through. But we've gone home with a 30-point cut on the index, even though the breadth of the market was weak. We've taken it in our stride, at least for today.
No, so the 12.5%, Samina, is that it's part of the rationalization, because you were taxing capital gains on the basis of different asset classes, something for property, something for gold, something else for debt. That was done last year or the year before. They rationalized that one. So this is part of the rationalization. That 12.5 is your bench. Now from there, like, it's 12.5 for everything. Indexation is gone. So they have to rationalize that part. And somewhere I think STT will also be kind of rationalized.
My question is, on F&O, there was a huge scare. What has come is this STT tweak. My question is this just the beginning? Are they done with are they done with their attempts to curb the large volumes coming into quote-unquote speculative trade?
No.
The consensus is no on this table?
Seems to be a no.
Consensus, the markets may be sharing STT today. The reason being that the finance minister hasn't converted gains from F&O as a speculative income, and so it will be charged to your
so not as bad as you would expect.
Not as bad as expected.
But that is still at the highest tax
bracket.
If you end up paying 1,000 rupees more,
why speculative income is taxed at the highest tax bracket anyway?
It's not been categorized, right? Trading from F&O is not being categorized.
No, it's business income.
It's business income.
Categorized as business income, which is your highest
tax. But that's the highest tax.
It's one of the things which market was expecting is emphatic increase in that taxation rate.
How can they do it?
Categorization which was there. But point is that if you look at the breakup of the turnover of STT, it's the proprietary traders who are the biggest traders in this market. And the impact for them is hardly any in that sense.
So no impact there. Okay.
Because retail is not going to go away because just STT has gone up. There is hardly any.
Fair call. Okay. Now, before I give my take, Sajid, your quick take.
My entire thing was that there should have been an increase in capex from 11.1 lakh odd crores, because there was a fiscal room available for them to increase it. Unfortunately,
we have taken that. Cost of the glide path
was used to convince and take care of Andhra Pradesh and Bihar and Orissa.
Can the economy?
Andhra Pradesh, Bihar and Orissa is not been funded from the budget. It's multilateral loans which they are going to do it. So it's not the budget which is funding it.
So where is that?
15,000 crores. That's a small number. 15,000 crores is going to Andhra Pradesh from the budget.
But that's a
Bihar flood relief. All the
everything
that is to multilateral agencies.
No, but all the expressway projects will come from the budget.
Budget
anyway. And rebuild the bridges which crashed.
That's the tax buoyancy which is helping you, right? To 4.9.
Maybe it comes at the offset
I'll give
of
an example.
divestment receipts not coming in.
STT collections were expected at 36,000 crores for this FY25.
Where is the money, Sajid?
The money is here, right, in STT.
No, but that's not the point, Sajid. Sorry, just the counter to your point though. There are 8 months left in this fiscal. Don't look at the percentage, but the absolute number of capex announced in the interim budget was fairly high. You couldn't do anything because of Achar Sanhita. How will the economy absorb so much of capital in 8 months? I don't think the Indian economy is primed to absorb so much.
Private sector is
Private sector is already doing it.
It's not happening to that extent.
So at some point of the private sector needs to do it, because how long can the government do? Anyways, it's debatable, but this is one point. What else is your top take?
The other thing was the tax buoyancy. I think they have taken a very conservative approach with respect to tax revenue collections, which is there. I believe that there is much more buoyancy there, and that could have been used for more.
To be conservative.
It could be. It could be. You can say that, but then you can use it somewhere else as well.
Maybe they will use it if the money comes in. Okay, fair call. Just very quickly, my take. I mean, one thing that stood out. I mean, I just like the fact that while the going is good, they have gone ahead and done a 4.9 number on the fiscal deficit, because one doesn't know if the economy slows down, whether they have enough ammo to move from a 5.1 to 4.5 in FY26 versus moving from 4.9 to 4.5. Because remember, when S&P changed its outlook, S&P mentioned that the state plus central should be 7. We know state is usually 3.5. So the central needs to move to 4%. So they need to show that glide path. They have done it 4.9 admirably now. Go to 4.5 presumably, and then cite 4%.
Let me give you the other side of that equation. If state plus center has to be 7, center is becoming more conservative because a lot of states will have to be spending ahead of two crucial elections, Maharashtra and Haryana, and state governments are with the same party. So, you have to give yourself some room. States will have to be spending all of your schemes to help farmers, subventions, a lot of that. Ladla Beti, Ladla Beta, all of that is coming on the state government's books.
Yes.
And you have to make room for that. So maybe that big
major
picture.
reforms which we are missing is land and labor.
Yeah,
labor is yet to be notified, but
But
labor is yet to be, both the state subjects, but they're linking the land reforms to the central grants, which is very good thing, because we saw that what happened to power sector, right? Means the discoms were not paying, were not getting the money, and distribution companies, the first right of money went to them, and so if you're going to link your capex cycle to land reforms and the labor reforms, there is a chance that in next 3 years you're going to achieve these things, and digitization of land and a better data pool of labor is going to be a big asset going forward.
Maybe off budget items, but who knows? Let's see. Anything else, guys?
I want to ask Neeraj a question. Two-part questions. Why did the market fall initially, recover and close flat, except for some sectors? Part number one. Part number two, how will the markets behave tomorrow when you go back, read the fine print, understand each sectors? So will the action be very sector specific and stock specific tomorrow? What is your take?
I made 2 or 3 phone calls after I got off air. The sense that, and it's a limited sense that people in the markets have, but the sense that I got is that the capital gains uptick was disappointing and there is an uncertainty there. Do we see a bit of a reaction in the days to come and not just tomorrow? Very likely. Is it a certainty? No. A lot of people talking about how the quantum of cash that domestic mutual funds were sitting on, and it will be interesting to see the buy figure today, that may have brought it. I doubt that mutual funds would buy into the market just on a 1% or 1.5% downtick. So I think that side of the equation need not necessarily be true. Remember, we've been falling for Friday, Monday, Tuesday we fell, so it's 3 days of a fall. Some bit of short covering might also have happened. It will be important to look at the cues today evening, both the institutional number that come in and the derivative action that has happened, to try and figure out. But is it the end of the road? I think most people said they would want to wait and watch. They are not able to predict right now whether the markets will necessarily go down tomorrow or not.
Historically, I think the belief is it's back to business. That budget euphoria or disappointment is only for the
I guess Bajaj Finance is not.
People are relieved the budget is over. You can get back to the nitty-gritties, and it's because that's the theme right now. It's a graze from the ear, not a shot in the head. since we are in that stage, it's not a complete assassination of the FNO kind of euphoria. It's just a graze to the ear, and maybe that's something that will be digested. Markets will come up with their fists raised high to get that.
Cross fingers for that.
Trump reference.
But guys, we have 4 minutes or 5 minutes left. Anything else that stood out? Anybody? Very quickly. Let's make this quick now.
I have just one take on Nirmala Sitharaman. Okay, because when she came in as finance minister after the late Arun Jaitley, passed away, and this is just something I have seen chatter. She was initially underestimated. A lot of people on Twitter, love to take on her. Consistently performed on the 2 or 3 key things that finance ministers are judged on. Are you tightening your belt on fiscal glide path even during COVID? Did not let things go out of whack. No free hand on giving away freebies which will wreck the balance sheet. Been very, very conservative, clear-headed, no nonsense, and has not had to roll back too much, which in the history of Indian budgets is something that happens all the time. So a word here, even after these elections, it was being speculated, will Nirmala Sitharaman get the finance portfolio again? Will there be other contenders? She's been, I would say, the dark horse in this race who has emerged very, very strong with a solid track record.
And I don't think anybody will contend with also. The one time that she had to roll back, she did it very immediately without any kind of issues. So I think no contention out there on how well the FM has performed. Really, full marks to her.
Yeah,
Please.
no, I have a point to add. See, the overall budget philosophy, we came to know, our viewers, network viewers, NDTV network viewers came to know from the Prime Minister when he gave an interview to our Editor-in-Chief, Sanjay Pugalia, very clearly these 5 key priority areas. He said, this is what I'm going to focus, and the budget is focusing, apart from all the other changes that have happened, farmers, jobs, welfare schemes, uplifting poverty, MSMEs, where absolutely, and women, and state competitive federalism. So she is focused on all those 5 areas. Now it's a question of implementing them over 5 years. So just to remind the viewers that the PM's interview to NDTV network highlighted all these things.
Yeah, and I think it's an important point that it's a 5-year piece. But anyways, yeah, we can go on with this. Samina, Sajid, any last points? Anything else?
No, I think from a personal taxation front, I think people would be happy that
Section 80C deserved a little bit more lease of life, but that's clearly not
maybe she wants you to go to the new tax regime.
And even on women, I must say, on women, there's a request to states to make it easier for women to buy properties. That's pretty much. It's a request.
Some of
to
the states already have a lower stamp duty.
So it's asking states to do it. So nothing really.
Yeah, buy properties but don't sell.
There's nothing really. Nothing really as of today. Nothing really today as for women.
Yeah, what was missing? I thought just one last point from mine. I think in the interim budget they had made this very interesting thing, and I missed it maybe, but they had made this very interesting provision or mention about 1 lakh crore for research, because R&D activities need to step up. I was hoping something would be mentioned around that.
She's retained it, I think.
But I think tough for investors, good for jobs, good for employment, good for the young, and good for political priorities as well in some ways.
Didn't give
done very well.
Didn't give too much to allies.
Done very well.
Too much to allies either, kept them all happy. They can go back to their constitutions and say that Andhra Pradesh and Bihar got what they deserved, but hasn't given too much away.
Got a lot.
And I'm talking in terms of allies, but of course Northeast, Odisha.
It was just high on headline value, like.
Yeah, but I mean, which is great. A budget shouldn't essentially be necessarily a market moving or economy moving event. It should be a statement of accounts, and I think in that sense this has turned out very well, save for people who will look at taxes because there are a lot of changes there. But well, that's it on this edition of the Editor's Cut. We hope you found it useful. Thanks so much for tuning in. You can mention in the topics comment segment what did you feel about this, and remember, stay tuned to NDTV Profit for more news and updates today evening as well as tomorrow morning. A power pack lineup to take you through the finer points of what the union budget had to dish out for the economy and for the investing fraternity.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment.
All you have to do
is ask Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Hi, thanks so much for joining in. You're watching NDTV Profit and my name is Alex Matthew. This is a special broadcast on Budget Day to help you understand the changes to the tax laws that affect you, the individual taxpayer. And there were a whole host of announcements that were specifically aimed at you this time around. And by the way, if you've got questions related to anything that we speak about over the course of the next half an hour or so, I'd encourage you to send them to us on any of our social media platforms. My guest today, who are going to help you understand everything that has changed from this year onwards, is Sameer Kanabar, tax partner at EY in the studio, Puneet Shah, partner at Dhruva Advisors, who's joining in remotely, as well as Arvind Rao, the founder of Arvind Rao and Associates. Thank you so much, gentlemen, for taking the time. And the intention, of course, of this show, as I pointed out, is to help our viewers understand everything that has gone down. But before we start, let's talk about who this is affecting, because it is affecting two cohorts primarily. We're talking about individual taxpayers, and there are several changes that have been announced to the new tax regime to incentivize it further. And there's also changes that affect the investor. So that's the second cohort that we will be speaking about. Speaking about the first set, let's first listen into the specific portion of this budget speech today that related to individual taxpayers. Here's what Finance Minister Nirmala Sitharaman had to say.
I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows. 0 to 3 lakh rupees, nil. 3 to 7 lakh rupees, 5%. 7 to 10 lakh rupees, 10%. 10 to 12 lakh rupees, 15%. 12 to 15 lakh rupees, 20%. And above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually.
All right, so that was the finance minister listing out the major changes in the tax slabs. She also said today, in case you missed it, that 2/3 of individual investors have transitioned to the new tax regime. Sameer Kanabar, to you first. Let's talk about the major change. Is it going to drastically change what taxpayers do? Will the remaining third also start moving to the new tax regime?
Yeah, so of course the idea is to see how we can sunset or transition out the old tax regime, because we can't be living with both the tax regimes. And hence, since last couple of years, we are seeing those changes coming in. Idea is to see how people can move into the new tax regime, make them more attractive and phase out all deductions, as has happened even in corporates where all deductions or exemptions have been phased out.
So that's going to happen in your opinion?
If we look at the current incentives available to people below 10 lakhs or maybe even in the band of 8 to 10 lakhs, the HRA, the deduction for interest for housing, etc., the old regime is still beneficial, right? And more likely they are still likely to continue with the old regime, because at that band every rupee saved is important for the class. So yes, people may not move, and of course while 2/3 have already moved, we will have to just see how people want to make investments in other class of assets and not be forced to make investment in a given class, and thereby switch to the new regime.
That's a fair point. Puneet, coming to you next, what did you make of these changes? A lot has been said in the run-up to the budget, the desire of the middle class taxpayer to get a bit of a relief. Do you think that this is that relief?
I don't think so. I think the amendments are quite few and far between. Much more was expected. For example, the slabs which are tinkered in the new regime is very, very less. I mean, the saving of 17,500 rupees is actually very less as compared to what was desired or what was expected. The slabs are changed by 1 lakh rupee at every level without changing the rates of taxes. So I think the relief is quite marginal to my mind. Number one. Number two, if you look at the deductions, like a standard deduction, which is only deduction available under the new regime, is now increased from 50 to 75,000. It's a welcome change. It's a welcome increase. However, to my mind, not sufficient, considering that 50,000 was set up maybe a decade back, years back. So I think the expectation was at least standard deduction to increase to 1 lakh rupee. And similarly, as Sameer mentioned, the taxpayers, the individual taxpayer, will still compare the deductions which are available under old regimes, such as HRA or interest on borrowings for the house property. And if those deductions are substantial, clearly they will continue to opt for the old regime.
You know, that's an operating point there. And in fact, it's perfect because we were discussing, Arvind, earlier on in the day, and you drew up an Excel sheet where you were talking about various scenarios, and of course it differs from a person to person depending on what they're investing in, what they're claiming, but there is a threshold beyond which the old tax regime still becomes more beneficial. Could you spell that out for us?
Yes. So before the slabs were increased today, if you look at assessment year 24-25 new regime tax rates, Some brief calculations mention that as long as the total deduction that an assessee is claiming is in the range of say 3 to 3.5 lakh of rupees, or anything up to 3.5 lakh of rupees, the new regime favors better. But the moment the deductions, which could mean the HRA, the ATC, the ATD, NPS, everything, all these put together, if the moment they cross this 3.5 lakh per annum threshold, then for taxpayers, say even the middle class taxpayers, the old regime looks better.
Yeah, okay, that's a fair point. By the way, and I hope that I will be able to pull this up at some point over the course of this conversation. The finance minister was asked this question specifically at a press conference about whether or not this is one of the steps that is being taken to finally get done with the old tax regime, whether there will be a sunset on this. And she said that this is being reviewed, that the changes to the new tax regime are in order to make the tax regime simpler. But she said that we still can't comment on whether or not this is the final death knell for the old tax regime. And the point that you're taking is well taken, Arvind, with regard to the benefits still available on the old tax regime. There were a couple of other changes as well, and specifically on NPS, and this affects quite a few people, so let's talk about it, Samir. Previously, deductions available by the employer's contribution to the national pension scheme. A lot of government employees benefit from this. It's been raised to 10% to 14%. There's a significant change there?
Yeah, and just one point on the previous slabs, that while the benefit projected 17,500 is actually 15 lakhs and above.
Yeah.
It is not getting translated at lower slabs.
We did a back of the envelope calculation. We said if you're earning up to 10 lakh rupees, the benefit is 10,000 rupees, right?
Absolutely. So if you look at 3 to 7 lakh slab, up to 3, of course, exempt, 3 to 7, the benefit is just 2,500.
Yes.
Which is basically 25,000 ka 10% kind of. So obviously, while what is being projected as benefit is not getting translated, it is only people in the higher bracket will get benefited under new regime, and that is why probably the recent statistics which has been put up interestingly on the website is to say that earlier 1/3 people were above 5 lakh bracket in terms of tax return filers. Now there are 50% people above 5 lakh bracket. So the 2/3 ratio probably that is coming in is because a lot of people are moving into higher tax brackets, and that's why opting. Whereas 1/3 are still in the lower tax bracket. Probably that's an interpretation. But coming back to NPS, so 10 to 14%, again, it is employer's contribution. So whatever employer contributes, extra 4% will now no longer get taxed and will be treated as exempt. And the way it works is that, this 14%, so if my salary is 100, if 14% is contributed, actually I say my salary is 86, it's not my 100, because that's how the way it gets calculated. So everything is then based on that. But obviously, any extra contribution above that, which is above 7.5 lakh rupees, up to 7.5 lakh, there is no impact. But above 7.5 lakh rupees, the interest gets taxed, not only the higher incremental amount, but interest gets taxed on an accrual basis.
Sure.
So that's the impact.
So that's a fair point. But it's still beneficial to the extent of that 4 percentage point increase in contribution, as long as you stay within that threshold. One more change that I will talk about with regard to the individual taxpayer before we talk about capital gains and the rationalization of capital gains tax. Arvind, we were talking about this earlier, and this has to do with the tax collected at source for transactions made in the liberalized remittance scheme. And you can actually set that off against the TDS, or tax deducted at source, if you communicate that to your employer. Can you explain that to us?
Yes. So Alex, while we were discussing this earlier in the day, and we did speak about TCS on LRS, but we also forgot that if you're buying a motor car, there is TCS on that as well. So basically, let me just spell it out. So whenever an individual is remitting money outside of India under the liberalized remittance scheme of RBI, which is up to $2.5 lakh dollars per year that can be remitted out. There is a 20% tax collected at source on this, as long as you are crossing that 7 lakh limit threshold that has been defined per individual. So the moment you're remitting this, there is a TCS collected and paid to the government, which now under the amendments in the proposal say that an employer can take cognizance of this TCS if the employee declares it to the employer, offset it against the tax liability of the employee for the year, and accordingly deduct lower TDS on the monthly salaries. So the direct benefit out of this is for all those people who are either buying a motor car or sending money outside. If they have suffered TCS, they can disclose it to the employer, and thereby it could mean a little higher in-hand money for them from their salary.
It's a fair point, and it's definitely a benefit because it's not a small amount of TCS that gets collected. It's quite a large amount, and that gives you more spending ability through the year if you communicate it to your employer. So you should do that. I will come to you, Puneet, about the changes in the capital gains treatment, but we have to slip into a very quick break. We'll be back on the other side to tell you all about that, and this is the second cohort that I'm talking about, the individual investor. Do stay tuned.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Welcome back. You're watching NDTV Profit, and we've so far spoken about the changes for the individual taxpayer. Let's also talk about the retail investor and how your lives changed from today onwards. In fact, let's listen into what the finance minister had to say about the rationalization of the treatment of capital gains.
Capital gains taxation is also proposed to be hugely simplified. Short-term gains on certain financial assets shall henceforth attract a tax rate of 20%, while that on all other financial assets and all non-financial assets shall continue to attract the applicable tax rate. Long-term gains on all financial and non-financial assets, on the other hand, will attract a tax rate of 12.5%. For the benefit of the lower and the middle income classes, I propose to increase the limit of exemption of capital gains on certain financial assets to 1.25 lakh rupees per year. Listed financial assets held for more than a year will be classified as long-term, while unlisted financial assets and all non-financial assets will have to be held for at least 2 years to be classified as long-term.
Okay, so a complaint that tax experts and indeed several investors had for many years is that the treatment of various assets when it came to capital gains and taxation of capital gains was very different. Equity was 1 year for long-term capital gains, real estate was 2 years, gold as well as certain other assets were taxed as long-term capital gains if held beyond 3 years. Now that's been simplified. Puneet, I'm coming to you hopefully for a further clarification as to what constitutes financial assets, what constitutes unlisted assets and non-financial assets.
Yeah, sure. I think this is the single most important amendment made by the finance minister, and I think it was overdue. There has been long pending demand in terms of rationalization of the capital gains tax regime. And as you rightly said, there is a multiple rates, multiple holding period for different assets, financial assets, non-financial assets, indexation available, no indexation available. So several issues in the regime, and I think a good attempt has been made to rationalize or to simplify the capital gains tax regime. If I were to just summarize, listed is 12 months so far as the long-term capital gain is concerned. Anything below 12 months would be short-term capital gain for the listed securities. That includes debentures as well as shares. As so far as unlisted is concerned and all other assets are concerned, it would be 24 months. So now the 36 months period has gone away. So that's easy. It's 12 months or 24 months. So far as the rate of tax is concerned, again, there are only two rates, actually three rates. One is 12.5% for long-term capital gains on all assets, whether it is financial assets or non-financial assets. A very bold step taken, all assets treated at par, whether they are financial or non-financial assets. The rate of tax for long-term is 12.5%. Remember, the finance minister has removed indexation benefit. Again, a very important measure, and maybe rightly so, because the rate of tax for several long-term assets are reduced from 20% to 12.5%, unlisted stocks or property or whatever, right? So indexation benefit has been removed. So it's 12.5% without indexation benefit. So far as short-term assets are concerned, it is applicable, the rates will be applicable at the slab rates. Applicable slab rates, taxes will be paid except the listed equity, where the rate of tax is increased from 15% to 20%. So for listed equity, the rates have gone up from 10 to 12.5 and from 15 to 20, while for unlisted, it has come down from 20 to 12.5, so far as long term is concerned. So it's a mixed bag in that sense. Maybe depending on your asset class, it will be either beneficial to you or it would be, or you will have a higher tax impact. So there is one specific class, sorry, just to complete, there is one specific class, which is, as we call section 50AA, which are specified mutual funds or marketing debentures, where irrespective of the holding period, whether it is 12 months, 24 months, it would be considered to be short-term capital asset, and the rate of tax would be on a slab rate basis. So that's asset class which is like unlisted debentures, etc., are also now included in that.
Yeah.
And the higher rate of tax has been provided in that.
And that doesn't change. The change to the treatment of debt mutual funds was done a couple of budgets back, and that remains to be the case.
Sorry to add, they have just changed the definition.
Yeah.
Earlier it was like 35%, less than 35% to equity. Now they've aligned it with other equity-oriented mutual fund definition to make it 65%. So I think that rationalization was also, I think it's a step in a right direction.
Absolutely. Let's delve a little deeper into this indexation piece, because there might have been some misconceptions about whether or not this ultimately is beneficial or harmful. And we've done some calculations looking at the inflation. So first of all, if you don't understand this, the indexation benefit is what allows you to set off the impact of inflation against the capital gains that you're making on a particular asset. So just to put things very simply, if you bought a house in 2005 worth 1 crore rupees, and if the value of that house is now 2 crore rupees, you've made a gain of 1 crore rupees. You have to look at the impact of inflation between 2005 and 2024, set that off against the capital gains that you're making, and then pay 20% on the remainder. That is being done away with. So you would probably be thinking that that's negative. But the reality is that it may not be. In fact, in most cases, it's either neutral or positive.
Positive, yeah. No, you're right. And if we look at least the immovable property, at least the back of the envelope calculation seems to suggest that if you're holding property since 2003 and later on, then the new amended rate of 12.5% as a long-term capital gain is more beneficial than the indexation that you are getting it. And obviously the indexation benefit started from 2001.
Yes, that's a base year.
Yeah, that's a base year. So it's hardly you lose out anything. So from that perspective, if you have recently bought property 2012, 2015, whatever, and if it is long-term and you're selling it, obviously this is going to be leaving more money in your pocket in terms of taxes in case you are selling it. And obviously, of course, you have a corresponding exemption if you're buying another house.
Yes,
so,
that remains.
Yeah.
Okay, so very quickly, that last point that I wanted to talk about, there has been a difference between the treatment of dividends as well as buybacks. And this was clarified today. There was a change that was announced, and the buybacks that you participate in. So suppose you have equity shares of a company and you participate in the buyback that a company is announced, and you sell shares in the buyback, that is now taxable in your hands. But there is a clarification. We earlier thought that this would be capital gains tax, but it is not capital gains tax. Samir, can you explain that?
Yeah, so buyback again flip-flop. Earlier buyback for listed shares was capital gains, then buyback tax was only applicable for unlisted, then they brought in buyback tax for listed, where the company used to pay buyback tax on the differential value of the buyback minus the price at which the shares were issued, which was being paid as at the rate of 21% by the company. Now a flip-flop to say that effective 1st October, so this is effective 1st October, unlike the indexation and all of that which are effective today.
Yeah.
So with effect from 1st October, the buyback will be taxable first, not in the hands of company but in the hands of shareholders. Second, this will be treated as kind of dividend income, taxed as income from other sources. So it will get taxed as per the slab rates. And the cost that you have incurred to buy those shares. So for example, you bought the shares at IPO or at a face value 10 rupees, and say you have 10 shares, so your cost is 100. So 100 effectively becomes your loss,
okay,
which is available to be offset against your capital gains.
Okay.
So in the same year, if you have any capital gain, you can offset the cost being resulting into loss against the capital gain, or you can carry forward.
And whatever you gain net of that loss is what you pay based on slab rate.
So one is of course the buyback value that you have realized is taxed as slab rate, as per your slabs. The capital gain will get taxed as capital gain because that is the stock that you have sold on the market.
Okay.
So that is capital gains and you're offsetting, and then there is a gain, you pay 12.5% long term, 20% short term.
Okay, so all of this, some of this, I shouldn't say all of this, because I think my guests today have done an incredible job explaining sometimes what is quite complicated. I must thank all of you. Thank you so much for joining in and for answering all the questions that I had. And I'm sure if my viewers have more questions, you will be amenable to answering them later. Of course, we will take them up over the course of today as well as in the coming days as well. Thank you so much for tuning in. There's lots more coming up over the course of this evening. And this is NDTV Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Hello and welcome to NDTV Profit. You're watching a special budget coverage program that we've prepared for you. I am Vishwanath Nair and I am joined by Mr. Dinesh Khara, the chairman at State Bank of India. Mr. Khara, welcome. I know you've had a long day. Certainly most people who have been tracking the budget have. But I just wanted to start off this entire conversation with your views on what exactly transpired this morning. How are you seeing the budget play out?
Well, I think as far as the budget is concerned, it's quite an inclusive budget with a very clear focus in terms of the rural and also in terms of MSME, and as well as when it comes to, there is a very sharp focus in terms of building the skills in the country, which eventually will go a long way in terms of making this country to be the developed country by the year 2047. The other very important piece is that a very sharp focus on productivity is something which is seen. Agriculture continues to be a major area, and the enablers are being provided in the agriculture sector. DPI is being created for the agriculture sector so that all such agri lands could be digitally tagged, and which will actually facilitate availing the loans for our rural customers. Likewise, when it comes to MSME, manufacturing and services, thresholds being lowered for the TREDs. Many more entities will come into the TREDs. Almost 22 new public sector entities will also be participating on the TREDs. Apart from that, almost 7,000 new corporates will also be participating on the TREDs, which will actually ease out the problem relating to receivable finance by the MSMEs. Some kind of announcement which have come in for the CGTMSC guarantee, and also for when it comes to the SMAs and how should we deal with the SMA. These announcements will go a long way in terms of encouraging MSME in the economy. So that's how I really read the budget. And in addition to that, the focus on climate finance, renewable energy, PM Surya Ghar, and the PMAY, these are some of the other initiatives which will go a long way in terms of creating enabling situation for the growth of the economy overall.
Right. Mr. Kharab, one of the questions that I had was with regard to the MSME announcement. Now, you've spoken a little bit about what the government is trying to do here. But with this credit guarantee scheme, now we saw right after COVID that credit guarantee scheme really supported the MSME sector as well as some of the other borrowers to try and stabilize their business, be able to access financing much easier. Do you think that going forward, that's probably going to be the trend that your public sector peers and yourself, as well as some of the private sector peers out there, will probably extend more credit to the MSMEs?
No, I think this is the kind of effort which is there. When it comes to this MSME guarantee scheme is there. This is what seems to be the intention. Because what you mentioned about the COVID and around that time, the portfolio level stop loss, the first loss guarantee which was given, it actually encouraged banks to lend and support the MSME at a very crucial time. So perhaps encouraged by that, this is what is being envisaged. And I'm quite hopeful that it will certainly give the boost to the MSME lending.
In terms of the announcements with regard to large infra projects, especially in states like in Andhra Pradesh as well as Bihar and some of the other eastern states as well, so there is a focus on building that segment of the country. Do you think that opens up doors for banks such as yourself to go out and fund these kind of projects?
No, of course, this much of it would have to be seen in the context of the nature of the project, but nevertheless, such infrastructure projects are always of interest as far as we are concerned, though we evaluate them and see to it that it should suit our risk appetite. But nevertheless, we do look at these projects as quite promising, and opportunity of growth in the economy actually goes up, because our sense is that infrastructure has got a multiplier effect as high as 4 times. So this actually could be a major engine of growth for the economy.
Going ahead, do you think that this is probably going to help that growth? Because, the focus from the beginning when the finance minister started speaking was employment, skilling and developing that human capital that is necessary for the growth of this country. You said eventually you want to, this budget will help in reaching a developed economy status. But in the near term, what do you think the benefits are for the economy?
Well, in the near term, of course, when you have got the trained manpower available, when you have got the opportunities which are right in terms of nature and which actually can be sweat over the period of time for the eventual growth of the economy, this is actually laying the foundation, and during the journey, it will certainly help in terms of reaping the benefits of the growth.
Right. One of the criticisms was also with regard to the level of taxation that has been announced, specifically on the capital gain side. I don't want to get into that specifically, but do you think that maybe something more could have been done over and above what has already been announced by the government?
I'm sure it must have been a very calibrated step, because government must have evaluated multiple options and then they would have taken such a call. So I don't have any more comment to offer on that.
All right. Mr. Kharab, a couple of last questions. I wanted to get a sense as, from the banking sector point of view. There is, even yesterday when the economic survey came out, the talk of public sector banks as a unit and the improvement that they've shown over the last many years have been highlighted. This has also been, a theme within the stock market as far as investing is concerned. What is the expectation for the public sector banking system going ahead in terms of growth levers that are available, in terms of possible potential opportunities that might come up?
Well, as far as, when the budget is very clearly focused in terms of inclusive growth, and inclusive growth unfolds opportunities into all subsegments of the economy. And we as the public sector lenders and we at State Bank of India are very keen to evaluate all such opportunities and take them to this logical conclusion if at all it suits our risk appetite. So I actually look at this as a great encouragement for taking the economy to the path of development.
All right. Last question. I just wanted to get a sense from you for FY25. Now we have about roughly 6 odd months left. What is this year going to look like for the banking sector?
As of now, it looks like to be promising. So I hope that whatever we have seen last year, maybe it could be at least that much or maybe better also.
All right. Thank you so much, Mr. Khara, for joining us and talking to us about your views around the budget and how exactly this is going to help the rest of the country. That was Dinesh Khara, the chairman of State Bank of India. Now let's cut into a conversation with Sanjeev Puri, president of CII, who's speaking more about the budget.
Anticipated. If we really split the difference between the changes that have happened in the tax slab, primarily we're seeing that the 3 to 6 lakh income, it's now expanded to 3 to 7, and the ones that used to be before, 6 to 9, who used to earlier attract a different rate, it's become 7 to 10. This is for the 10%. So really in those two slabs only we are seeing a particular change. Considering that until 7 lakh, there was already a rebate in place. Doesn't this change only perhaps benefit that small percentage who earn 9 lakh to 10 lakh per annum?
No, absolutely not. Any change that is brought in the lower tax slab, let me clarify to you and to your audience, it impacts everyone beyond that tax slab. So if there is an increase in the slab from 3-6 to 3-7 lakh, this benefits everyone who's having an income beyond 7 lakh, 8 lakh, 9 lakh and onwards. So everyone stands to benefit. Whereas, if we had increased or changed the slabs at higher slabs, tax slabs, then that would not have benefited those who are in the lower tax slabs. So everyone having an income of more than 7 lakh, because 7 lakh till 7 lakh, in any case it is exempt because of the rebate that is given, stands to benefit depending on what his income level is. So even a person having a salary of or an income of 15 lakh rupees, 10 lakh rupees, 11, 12, 13, everyone stands to gain depending on the income that he has. And the finance minister had announced that the maximum relief is 17,500 rupees for those having an income of more than 15 lakh rupees and are salaried.
Right. Mr. Nageshwaran, you did speak about jobs yesterday. 78 lakh jobs need to be created for us to reach the vision of Viksit Bharat. How will benefits of first-timers and contributions to the EPFO actually aid in job creation?
No, actually, the job creation agenda in this budget has been extremely comprehensive, and it is not just this one particular scheme you're referring to. There are about 5 schemes, all of which indirectly and directly add to the employment potential and employment generation potential. See, the thing is, when you hire a first-timer, he or she will take some time to settle down into the job, and their productivity will be relatively low. And naturally, therefore, the productivity-adjusted wages in the initial months will be the highest. Yeah. But by agreeing to subsidize the first month wages up to 15,000 rupees spread over 3 installments with also an additional condition of creating financial literacy there, the government is basically absorbing the cost of the adjustment of the employee into the workforce by paying the salary of the first month up to 15,000 rupees. And there is also an incentive given for bulk job creation, which is in Scheme C. Right. And then there is Scheme B, which talks specifically about manufacturing job creation. And all of these things are actually, and together with the internship scheme, and then to the hub and spoke model for ITIs. So all of them collectively are very likely to create a significant jump in employment generation in the economy in the coming years.
Right.
If I may just add to him, actually the benefit in Scheme B for the manufacturing sector, with certain conditions of course, the benefit is much more. It is to the extent of 2,16,000 rupees. So if you add the 15,000 rupees in Scheme A and the 2,16,000 rupees in the Scheme B, the total amount that the government is willing for new employment in manufacturing sector can go up to 2,31,000 rupees per new employment, which speaks about the government's commitment towards aiding and promoting new employment.
Absolutely. Mr. Malhotra, also there were measures to boost consumption that used to be really widely discussed in the run-up to the budget. Do you think the budget actually adequately addresses all of that?
Yeah, so we are leaving, as I said, much more on the tax side, by reducing the personal income tax rates on the new tax regime. We are leaving much more in the hands of the taxpayers, of the consumers, and that will certainly help boost consumption.
And consumption growth also comes from the employment generation. I mean, more people find jobs, more income growth happens, and consumption growth happens. So apart from the lower tax rates in the new regime and the higher standard deduction, the employment generation is a very direct boost to incomes and therefore to consumption.
Sir, if I may, this question, it actually follows what was also spoken yesterday at the economic survey, one on being, speculative trading being a concern. And this has been something that regulators have also raised. This conversation comes from different quarters too. And today we see subsequently the STT on F&O also being introduced. Now, just on, does this adequately address that concern, this particular move? And also in terms of the indexation benefit, the year has been set at 2001. So could we get a clarity on that particular date and why that's so? Two questions.
Yeah, so actually two questions. First question, on STT. This is more, of, I'm not sure, whether this will adequately address the concerns on F&O. Personally, I don't think so. But I do believe that this is something which we should not really be promoting, and so it is keeping this in mind, that we have actually increased the STT rates on something which we don't feel is good for the economy, something which is good for the capital markets beyond a point. And so, because it is really actually, speculative. Of course, there are other measures which can be taken. We'll be happy if this actually results in reduced F&O activity, which may or may not happen. Coming to your second question on indexation for real estate, gold, and some other asset classes. The rate presently is or was till yesterday 20% with indexation. We have now reduced it to 12.5% without indexation. However, as I had clarified even in the press conference, the indexation benefit till 2001 shall continue, which means that if a property was bought before 2001, and if it is sold later on after 2001, the price of that particular property when it was bought, or the price with indexation in the year 2001, whichever is lower, the price as it exists in 2001, or that cost acquired, prior to 2001 with indexation, whichever is lower. So it gets the benefit of indexation till 2001. However, after that, whatever is the increase in the value of the property, that will be taxed at 12.5% flat without any benefit of indexation after 2001.
So before we let you go, another broad theme that we saw in the budget speech with respect to taxation is rather an attempt at a comprehensive review, be it for GST, be it for custom duties, some of which were also announced, and also, of course, for the IT, there's also a comprehensive review. Now, if we look at it in another 6 months, perhaps another roadmap is also likely to come. Just in that particular sense, what can we expect when we say this comprehensive review, and on what level would it be attempted?
See, this has been a continuous affair, as you are aware, and as you have been witnessing in the various finance acts, or even otherwise through the amendments in the rules. We want to make life easy for our taxpayers, for our industry and trade. So whether it is the rollout of GST, which happened in 2017, bringing down the compliance burden, reducing the logistics costs, etc., or whether it is in customs duties, where last budget we decreased the number of tax rates. So this is actually work in progress. What we can expect, and this budget again, you saw a lot of measures for simplification. We believe that if we can make life simpler from taxation perspective, whether in direct taxes or indirect taxes, that should yield good dividends both for the industry, because they are certain about what taxes they have to pay, and as well for the government, because that actually results in tax getting paid, revenue getting generated, rather than demands getting created and embroiled, in various litigation. So going forward, a 6 months time frame has been set, both for customs duty rationalization as well as for income tax act review. We will try to simplify the law. There are a number of exceptions, number of provisions which are spread across various chapters and sections. There are a number of procedural things in the substantive law. There are a number of provisions which are now perhaps obsolete, redundant, some of them, which may not be needed as on date.
Right.
And so we will have a comprehensive review of all those provisions to make it easy for the common man to be able to read it, to be able to comprehend it, and to be able to implement it.
That's very interesting. Coming to something that we were discussing, the question of jobs, because that clearly was the underlying theme of this budget. So there is the sense that, when the Prime Minister says that the first job will be given by the government to a large part of the youth, there's a deep political messaging in there. But there's also a sense that it also will lead to formalization of the economy. Are we doing enough for the unorganized sector? Would you like to take that?
No, actually, you can't say that this is not enough for the informal sector. This is exactly an incentive for the enterprises to become formal. So when you are actually helping the informal sector to move toward to become part of the formal sector. So that is actually a support and a massive assistance being given to the informal sector. And secondly, if assuming your question is right, and if you are boosting the formal sector, it is always the case that the formal sector's growth does spill over into the informal sector demand as well. So in both ways, both directly and indirectly, it is a benefit to the informal sector as well.
Okay, sir.
If I may also want to, one of the nitty-gritties was that, in terms of the scope of the safe harbor rules, they would be expanded was one of the announcements that was made. Could we get some clarity in terms of where this would be headed?
No time frame has been given, but we would like to do it as early as possible. I think you are mentioning about the safe harbor rules for raw diamonds sold by the foreign mining companies when they come here in India. So you are aware that we have allowed them to display those diamonds, but because of certain complexities of our tax laws, they display them here, but they are then actually sold to Indian companies abroad. So we want to shift that trade to India, and you have seen a number of measures in this regard. Diamonds is only one of them. There was another which pertained to shipping, foreign shipping lines, again because there is an apprehension in their minds about taxation with respect to a number of entities which are actually involved. There is not one shipping company, but they have a very complex structure, because of which it can lead to it can lead to taxation on those multiple entities, which not only creates uncertainty but can also lead to very high taxation. So we are now providing a very simple rule in the form of that's also a kind of a safe harbor, a presumptive taxation which is being given to them. The effort really is to promote investment and employment in our country wherever there is scope. So whether it is reduction in duties or simplifying tax rates, it is all about investments and employment. Thank you.
Thank you, sir. Thank you. And that's all we have time for. Thank you so very much for joining us, sir.
Pleasure.
This was Revenue Secretary Sanjay Malhotra, sir, and Chief Economic Advisor, Mr. Anant Nageshwaran. Stay tuned to NDTV Profit and NDTV 24/7 as we bring you conversations with more budget architects.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
Or a long-term investment.
all you have to do
Is ask profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential.
Welcome back. You are watching NDTV Profits, a special broadcast on budget. And earlier this morning, Tamanna spoke with Sunitha Reddy, the Managing Director of Apollo Hospitals. Let's listen in to that conversation.
All right, a host of budget reactions coming in, and we're speaking now with Sunitha Reddy, MD of Apollo Hospitals, on the first budget of the third term of the Modi government, the one with a lot of expectations of big bang, and the thrust seems to be on job generation and employment. The private sector also enlisted in quite a few ways. So let me start with a reaction on that. Ms. Reddy, thank you so much, first of all, for speaking to us on NDTV Profit. And let's get your take on all the steps for employment generation that have been spoken about today.
Yes, I think that, the Finance Minister, after building a really strong economy in 8 years, this is really the thing that needed to be done the most. I think the focus on employment generation was very much needed, and she did that through several schemes. One is the employment for 4.1 crore youth, which will result in a 2 lakh crore outlay, is something that I think, especially in the healthcare industry, it's something that is very favorable in terms of being able to create new jobs and take in these new individuals who will, as we grow as a company, will get jobs within the healthcare industry. So clearly for the services sector especially, I think it's a huge incentive, and I'm sure it will apply to manufacturing. And also we must consider the ripple effect of this. So for every bed we create, we employ 6 people. And beyond that is the ancillary industries where we generate 4 times more employment. So you can see that it will have a huge ripple effect on the space of employment. But I had hoped that we could do more for healthcare.
I was just going to come to that. Not too much said on healthcare per se.
Yes.
I think duty exemptions on 3 cancer drugs. That's the extent to at least what I picked up from the speech. Do you think that this was a bit of an opportunity that could have been taken? And obviously, I'm sure the hope that steps are taken outside the purview of the budget?
I think we need to work and make sure that that the sector is recognized, not just because it's industry, but for the work that it contributes to the economy. And clearly, the customs duty exemption is the right signaling, because oncology cancer is growing at 22%. So the customs duty exemption on 3 additional drugs, on X-ray tubes which are used in X-rays, mammograms, and linear accelerators, of course, will make the treatment more affordable. So very heartening to see. And I think the third point was that we can now use our CSR to take more students for internship, and that will greatly benefit both the students and the companies. So.
Yes. I just to follow up on that, because when I was listening to that announcement on the internship scheme, 5,000 rupees a month for 12 months, a one-time payment of 6,000 rupees, and 10% of this has to come from the private sector in terms of CSR. Does this work out positively for you as a company?
Yes. No, it does, because, the work that we do, and I think that the impact that it makes, to have more people to be part of this effort will really intensify and create a larger impact. So it's a good thing.
But you have to keep them on for 12 months. It's a 12-month internship.
So our CSR budgets are for 1 year, so that makes completely makes sense.
Okay, so that's a big positive as far as CSR is concerned. What about the incentives, ma'am, which has been given to companies, and I think for smaller companies also this will be a big benefit in terms of 3,000 rupees towards EPFO. I'm just wondering if the focus is on getting companies to employ more rather than only skilling potential employees. Do these announcements move the needle in your view?
So if you look at a company like ours that is really growing, we're adding beds, we're creating new infrastructure. So for someone who's creating new infrastructure, adding more beds, it makes a lot of sense. So for companies in that growth mode, I think without a doubt it makes sense. For companies who are looking to rationalize their cost structure, I'm not so sure.
Okay. So for companies that are looking to rationalize cost structure, it might not be that great. Just one more point, ma'am, on the corporate tax rate of 15%. That benefit has not been extended in this budget, or no announcement has been made so far. Do you think that that's a bit of a disappointment? Would you have hoped to see that? Also, no clear announcements on PLI schemes.
Yes. No, we had hoped that that they would do something with, like they had done PLI for manufacturing, that they would do the same for services, so that they would link employee adding more jobs along with manufacturing and create something special around that. That didn't happen. But I think over a period of time, the importance of doing this should happen, because if you look at what is happening in the South and the global capability centers, as well as the service industries that have really been created over the past decade, this is an area of huge importance.
Okay. All in all, ma'am, what is the one best thing, and what is the one thing that you were least impressed with, or you would have hoped for more in this budget?
No, I think the best thing is that it's business as usual. Slight difference in in tax rates for some people in terms of long-term capital gains tax and how they view it. So there's no negative impact, and I think it's for us to realize the positives and take it forward and make sure it happens in our companies.
Okay, thank you so much. That was Sunita Reddy, Managing Director of Apollo Hospitals, saying that she liked the budget. Hope there was more in terms of announcements on the healthcare sector specifically.
All right, now NDTV's Gauri Dwivedi also spoke with the CII President-designate Rajiv Memani about his take on the budget. Listen to what he told us.
There were some long pending issues. I think there's overall simplification in some of them. So for example, angel tax and the removal of that. There are some things they've done on the reassessment side. Earlier, what could be open till 10 years now has been brought down to 5 years. Search and seizure also, they've reduced the time for which. So I think there's a lot of it. And the fact that the new tax code will be coming and the, Vivad Se Vishwas Tak scheme 24 being launched. So that's one bucket of simplification. The second bucket is, to give relief. I would say some of the foreign companies, it was their long-standing demand to reduce the tax from 40% to 35%. I think that's been good. Equalization levy has been taken away, although some of the BEPS-related relief, the provisions, at least I've not seen in the fine print as yet, but if they've come, that'll be good. Otherwise, it may lead to some level of ambiguity. And the third is the relief to the sort of salary paid tax individuals. So that, as you have seen, that relief, increase in standard deduction, especially if you're in the new tax regime, NPS, some modification in the slab rates. So that's one aspect of it.
Now, the markets have taken the announcement of hike in capital gains tax in the budget 2024 negatively, yet some remain quite positive with the news. Vijay Kedia believes that this is important to boost the country's economy.
देखो, कंट्री जिंदा रहनी चाहिए मैडम. कंट्री जिंदा रहेगी तो शेयर बाजार जिंदा रहेगा. इकोनॉमी बढ़ती रहेगी तो शेयर बाजार बढ़ता रहेगा. शेयर बाजार बढ़ता रहेगा तो मेरी भी प्रगति होती रहेगी, मेरी वृद्धि होती रहेगी. मैं खाली अपने बारे में अगर सोचूं कि मेरे को टैक्स नहीं देने का है, तो ऐसा तो कैसे होएगा ना, फिर तो कंट्री बंद हो जाएगी. तो मैं इसके एकदम फेवर के अंदर हूँ. मेरे को लगता है कि 12.5% उन्होंने कम बढ़ाया है. अगर आप 15% भी, मैं तो सोचता था 20% करेंगे. मैं आपको सच बताता हूँ, मेरे मन में तो ऐसे लगता था कि बाकी जो दूसरी एसेट क्लासेस सब में 20% टैक्स का स्लैब है लॉन्ग टर्म का.
All right, time for a very short break here. When we return, we bring you more reactions to the budget.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
So it's simple. If you think the market is moving upwards, just buy Nifty call option. But if you think the market could slide downwards,
Simplifying futures and options trading.
Don't worry about the future.
We've got your options covered.
Futures and options strategy that will help you move with the tide.
An unmissable trade.
If you want to be in the money.
stock selection isn't an easy task.
And neither is choosing the right
Welcome. Now we have yet another industry reaction for you. We spoke to Vinod Agarwal. He's the president of the Society of Indian Automobile Manufacturers, or SIAM. He is also the CEO of VE Commercial Vehicles. Here's his first take on the budget.
I think our reaction is very positive. We are very, very positive from SIAM, and we welcome this budget, especially the continued focus on growth-oriented approach and large allocation for infrastructure projects and a very large allocation for rural development and infrastructure of 2.66 lakh crores, as well as announcement of focus on Pradhan Mantri Gramin Sadak Yojana and linking of 25,000 villages. I think these are very, very good steps which will boost the rural economy, and that was one of the needs which we had requested the finance minister, that they should be focused on the rural economy. So we are very grateful to the finance minister that there has been good focus on the rural economy. Other than that, there has been very good focus on the skilling and upskilling, employment generation, women, as well as on manufacturing, and focus on MSMEs. That is also a very welcome step. So overall, from SIAM, we welcome this budget that has been announced today.
And earlier in the day, Tamanna also spoke to Biocon founder Kiran Mazumdar-Shaw. Here's what she told us.
We're getting you all the top corporate views on Budget 2024 right here on NDTV Profit, and I'm in conversation now with Kiran Mazumdar-Shaw, founder and executive chairperson of Biocon. Ma'am, great to speak with you on NDTV Profit and, get your view on the budget. Let me start with your sector, the healthcare sector, and others we spoke to from this space. Their first response was good budget, but a tad disappointment that more was not done for healthcare. What would you say?
I've always been, crying for investment in research and innovation, and I was happy that the government finally made a serious plug for investing in this area. I think they clearly talked about research and innovation, not only in agri, but also in every other sector. Of course, it remains to be seen how much of that 1 lakh crore will come to the pharma sector and how it will come, whether it's in the form of grants, whether it is in the form of tax incentives. So let's wait for that. But at least it's a step in the right direction. As far as, the duty exemption on 2 cancer drugs is concerned, I think that's just symbolism. I think what I would like to see is GST exemption on all cancer drugs and all cancer diagnostics, because that is what really will reduce out-of-pocket expenses for patients, because these are expensive treatments and we need to focus on affordability.
Okay, so more could have been done on diagnostics and healthcare overall, but the big push in this budget is undoubtedly on employment, and I want to get your view there because we keep speaking consistently about jobs and what the budget can do for jobs. Do you think that everything in the armory possible was used? Are you happy with what they have done for jobs and incentivizing employers?
Well, Tamanna, I think, jobs has been a focus in this budget. And I think they focused on skilling and skill development through internship, which I think is the right approach in terms of focusing on employability and jobs for the future. And I think it is a win-win to basically marry government subsidies in internships with CSR. So I think that's the right approach. So let's see how it all pans out. But right now we know that there are a large number of manufacturing opportunities that India is trying to address. And for that, you really need a large skill force. And if you can actually use, this internship program to skill your labor force or your manufacturing workforce, then I think you have a good chance of getting a lot of that manufacturing coming our way.
In terms of the internship program and also the subsidy for new employees for EPFO, do you think that incentivizes, and I'm not talking about only large companies like yourselves, the idea is to have more smaller companies also go out and hire more. Is there enough of an incentive from an employer perspective?
I don't really subscribe to that as much as I subscribe to the internship program. So that's where I will sort of, rest my comments.
12-month internship works from the CSR fund?
I think internships can work very well because, a lot of countries have very successfully shown that internship and apprenticeship programs really work very well in terms of employability, employment, and of course, upskilling.
In terms of push to manufacturing, and I'll get one comment from you on this, it was expected that the PLI schemes would be doubled down upon, you would create more incentives for companies to come and expand manufacturing. That wasn't really done. Likewise, no clarity on whether the 15% corporate tax rate incentives will be continued or not. Would you have hoped to hear more on that?
So let's hope that it will continue. Sometimes you feel that if it's unsaid, it means that it's continuing. I really would like to see the 15% tax rate apply both to greenfield and brownfield projects, because I think in brownfield projects, they're trying to upgrade their facilities and modernize their facilities. So that also needs a 15% tax incentive, in terms of the tax rate. But I think in terms of the PLI scheme, they have basically indicated that they will not expand the scope of the PLI scheme beyond the sectors that they have addressed right now. But I would like to see the PLI scheme increasing in allocation because there is a need for capital employment by industry.
Just to wrap up, what would be your one big positive and one thing that you found wanting in terms of the budget announcements?
I think overall, I would say that the budget really signaled very positively that they wanted to focus on certain economic drivers, one being, of course, jobs, the climate initiatives, green technologies, cutting edge future technologies, and of course, research and innovation. So I have no, complaints on those fronts. I think we didn't hear enough about GST rationalization, and maybe that's something that we will have to wait for.
Yeah, and perhaps GST rationalization is also something that the GST Council has to look at, so we'll wait for that. It's also a stated aim. But thank you so much for speaking with us today. Kiran Mazumdar-Shaw there, welcoming the budget and especially the allocations on R&D.
One of the bigger announcements in today's budget, the centre announced 3 schemes to generate employment. Here's the Finance Minister talking about those.
Scheme A, first-timers. This scheme will provide 1 month wage to all persons newly entering the workforce in all formal sectors. Direct benefit transfer of 1 month's salary in 3 installments to first-time employees as registered in the EPFO will be up to 15,000 rupees. The eligibility limit will be a salary of 1 lakh per month. The scheme is expected to benefit 210 lakh youths. Scheme B, job creation in manufacturing. This scheme will incentivize additional employment in the manufacturing sector linked to the employment of first-time employees. An incentive will be provided at specified scale directly both to the employee and the employer with respect to the EPFO contribution in the first 4 years of employment. The scheme is expected to benefit 30 lakh youth entering employment and their employers. Scheme C, support to employers. This employer-focused scheme will cover additional employment in all sectors. All additional employment within a salary of 1 lakh rupee per month will be counted. The government will reimburse to employers up to 3,000 rupees per month for 2 years towards the EPFO contribution for each additional employee. The scheme is expected to incentivize additional employment of 50 lakh persons.
All right, time for a very short break, but stay with us on NDTV Profit as we bring you more news and updates.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Listen to the voices of reason as they talk about corporate health and investing principles with me, Neeraj Shah, on my show, Talking Point.
Stock selection isn't an easy task.
And neither is choosing the right moment to sell.
Whether it's a doubt about a short-term trade
or a long-term investment,
all you have to do
is ask Profit. Bro, what are you doing?
I'm trading FNOs.
So, have you made any money?
Oh, it's simple. If you think the market is moving upwards,
people tend to borrow from their own resources to pay for their kids. The thinking, of course, is and look, this is an Indian concept, is that I take care of my kid now, my kid is going to take care of me down the line. Is that wrong though?
I don't think that today's generation thinks like this. Like today's generation who has kids in 20s, I'm saying, wants to live with their children. So.
Welcome back. Now, speaking on the global economy, while unveiling the budget 2025, the finance minister highlighted India's economic growth and inflation targets. Listen in.
The global economy, while performing better than expected, is still in the grip of policy uncertainties. Elevated asset prices, political uncertainties, and shipping disruptions continue to pose significant downside risks for growth and upside risks to inflation. In this context, India's economic growth continues to be the shining exception and will remain so in the years ahead. India's inflation continues to be low, stable, and moving towards the 4% target. Core inflation, that is non-food and non-fuel, currently is 3.1%.
Right, that was the FM speaking on growth and inflation over the past year, and in continuation to that, I'm joined by the Executive Director of the IMF, KV Subramanian. Sir, thank you so much for taking time out.
My pleasure.
So, to begin with, the FM in her speech today spoke about the fiscal deficit, targeting it in line with expectations at 4.5% for FY26, beyond which she said that the endeavor will be to keep the fiscal deficit each year such that the central government debt will be on a declining path as a percentage of the GDP. So I do want some help unpacking that statement. So far we have clearly focused on bringing down the fiscal deficit as a percentage of the GDP, and that has of course also gradually helped consolidate debt. Going forward, are we going to more actively be targeting government debt specifically?
What the Honorable Finance Minister mentioned is an important aspect. If you look at the debt to GDP ratio, and you would recall in the 2021 economic survey, we had actually covered this in great detail. Conceptually, the debt to GDP ratio depends on the primary deficit as well as the difference between the nominal rate of borrowing and the nominal rate of GDP growth. If the nominal rate of GDP growth is higher than the nominal cost of borrowing, which it has been consistently for India, over the last 3 decades, then the debt to GDP ratio is likely to come down, because keep in mind, fiscal deficit is basically the primary deficit plus interest payments. So when the fiscal deficit is coming down and we have higher growth, then the debt to GDP ratio will automatically come down. I will also mention, even during the COVID year, despite the very large increase at that time in the fiscal deficit, if I remember, close to about 10%, we had predicted that the debt to GDP ratio will not rise, will remain at about 85 to 86%, which is what it has been, and that was based on this difference, the R minus G differential, as economists say. R is the nominal cost of borrowing, and G is the rate of growth. An important observation that I want to make here is that if you look at the assumption that has been made for GDP growth, nominal GDP growth, that's been taken at 10.5%. which I think is very conservative, as has been the case in the past as well. My sense is that real growth should definitely be 7% plus. And even if inflation is at 4%, that will mean that the nominal rate of growth will be about 11.5%. So the actual fiscal deficit number is, likely to be less than 4.9%. So my sense is maybe 4.6, 4.7% is what it is likely to be, in the coming year. As a result, the path towards 4.5%, I think, is absolutely credibly laid out.
All right, that's indeed an interesting takeaway. There are already chances that we might see fiscal deficit for FY25 as well come in a tad lower than is being projected in today's budget. I do want to ask you about, we've spoken about, what growth is expected to look like in FY25. There has been a lot of credibility from the government in terms of the fiscal consolidation path, but at the same time there are some concerns as well that the net fiscal impulse is a tad restrictive in terms of growth. Do you sort of agree with that?
Look, generally, when you think about the fiscal impulse, when the economy is not doing very well, countercyclical fiscal policy demands that the fiscal impulse should be strong, which it was during the COVID years. But when the economy is doing well, like it has been, last year's growth was 8.2%. That is indeed the time to consolidate and thereby, lower the fiscal impulse. I think, the finance minister's emphasis on fiscal consolidation is absolutely along the right lines. That is what policymakers would actually and economists would recommend. But at the same time, even with a moderate fiscal impulse, the emphasis on growth drivers is visibly there. As I think a lot of commentators have already mentioned. For me, the biggest part in this is employment. These slew of schemes that have been announced for employment creation. I would particularly look at the skilling part there, which is the internship with top 500 companies. Many of us have ourselves worked as interns in these large companies, and the experience you get as an intern actually really helps you and makes you attractive, because you develop capabilities that makes you attractive for not just the top 500 firms, but firms actually that are smaller than that as well. Together with the incentives that have been given to employer and employee, you would recall the Atmanirbhar Bharat Rozgar Yojana during COVID actually has created about 60 lakh or avoided, job loss of about 60 lakh jobs. So, incentives that have been given in this budget for employment creation are based on schemes that have already worked well. So I'm actually quite confident that it will lead to employment creation, which is important for inclusive growth. At the same time, some of the other very important, announcements, the angel tax removal, which will help the entrepreneurial ecosystem, the, relook at the income tax bill, which is Income Tax Act is from 1961, so 83 years old. And at the same time, the credit guarantee for, MSMEs, the Mudra loan, threshold being increased to 20 lakhs. These are all aspects that will really help growth. So despite the moderate fiscal impulse, I think the growth drivers are very much there. And this is actually growth not just for the next few years, but for a longer horizon reaching up to the millennial year in 2047.
All right, so you do find the budget to be growth supportive. You did speak about the thrust on employment in today's budget, and while the FM announced schemes worth nearly 2 lakh crore rupees, we've also in yesterday's economic survey and generally as well been talking about the challenges and the necessity of job creation. To that extent, while today's budget was a step in that direction, do you still think that the figures we're talking about in terms of the necessity and the numbers of jobs that need to be created, there's more that needs to be done? What's your take on that?
I'm glad you asked this question because on employment, it is my opinion, and I think based on data, that the negative narrative using poor quality data like the one from CMI has run ahead of the reality. If we use high quality data, from PLFS, and the CLEMS database, which is what the RBI report uses. By the way, the CLEMS database is a worldwide database, actually, not just for India, but across, and high quality data. Over the last 10 years, excluding jobs that have been created in agriculture, 9 crore jobs have been created, which means every year about 90 lakh jobs have been created, over a 10-year period. And if you include the jobs that have been created in agriculture, that's 12.5 crores. So the 80 lakh number that has been talked about in the economic survey, I think, needs to be seen in this perspective that even without the specific emphasis on employment, in the last 10 years, about 90 lakh jobs have been created. And that's a credible number, as I said, because it actually uses very high quality data. Together with the impetus that's been provided, I think employment creation would definitely be much higher. Let me also provide one more context. The 80 lakh number in and itself may look big, but the overall workforce in India is about 60 crores. So 80 lakhs is only 1.3% of the overall labor force in the country. For a country like India, as large as, about 1.4 billion population, every number looks big, but you have to actually look at it in context. As I just mentioned, as a proportion of the overall workforce, it is only 1.3%, and this many number of jobs have been indeed created over the last 10 years. So there is no reason for us to not believe that, that much amount of job creation, in fact, more, given the impetus on employment, will be created going forward.
All right. Thank you so much for taking time out for us, Mr. Subramanian. Those were indeed valuable comments. With that, it's time to slip into a short break, but do stay tuned to NDTV Profit for our continuing coverage on today's budget.
People tend to borrow from their own resources to pay for their kids. The thinking, of course, and look, this is an Indian concept, is that I take care of my kid now, my kid is going to take care of me down the line. Is that wrong though?
I don't think that today's generation thinks like this. Like today's generation who has kids in 20s, I'm saying, wants to live with their children. So here's what it is. You do that and then you're dependent on your kids, or you be selfish and try to figure out a balance, and then you're living life on your own terms. So I think it's really a question of, how do you want to have your future life, right? Where you may not necessarily be earning to pan out.
People tend to borrow from their own resources to pay for their kids. The thinking, of course, is and look, this is an Indian concept, is that I take care of my kid now, my kid is going to take care of me down the line. Is that wrong though?
I don't think that today's generation thinks like this. Like today's generation who has kids in 20s, I'm saying, wants to live with their children. So here's what it is. You do that and then you're dependent on your kids, or you be selfish and try to figure out a balance, and then you're living life on your own terms. So I think it's really a question of, how do you want to have your future life?
Minister Nirmala Sitharaman in her 7th budget announces incentives for both job seekers and employers with a key thrust on skill development. There is good news for salaried professionals. Standard limit of income tax raised to 75,000 rupees from 50,000. Capital gains tax and securities transaction tax hiked. Fiscal discipline is a priority as the fiscal deficit target for the financial year is reduced to 4.9% instead of 5.1% target that found place in the interim budget. Finance Minister keeps NDA allies happy, announces a flurry of special projects and financial help for Bihar and Andhra Pradesh. The Prime Minister lauds the budget, says it will make India a global manufacturing hub and is a boost for the middle class. The Supreme Court concludes that a retest for NEET UG is not warranted, says there's nothing to show that there was a systemic breach in sanctity of the exam. The markets were not impressed by the budget. The Sensex and the Nifty extended their decline for a third day in a row. Good evening and welcome. You're watching our continuing coverage on the budget today. I'm Nupur Talwar Suri, and let's begin with taking you through the top takeaways from the union budget today. The first, of course, is something that's going to impact everybody. The standard deduction in income tax has been raised to 75,000 rupees from 50,000 rupees. Now, the new tax regime slabs have been changed. Salaried employees get to save up to 17,500 rupees per year with this. The Finance Minister has promised a comprehensive review of the Income Tax Act. Also, the long-term and short-term capital gains tax as well as the securities transaction tax have been hiked. Angel tax has been finally abolished. Now, this was a long-term ask of the startup industry, and positive reactions coming into that. The customs duty for mobile phones, gold, cancer medicines and medical equipment have been slashed, and again something that's been given a thumbs up by a lot of companies. Now, fiscal discipline is in the focus as well. The fiscal deficit has been cut to 4.9% from 5.1% in the interim budget, and going forward, the Finance Minister spoke about bringing it further down to 4.5%. Now, there are a slew of special finance schemes for Andhra Pradesh and Bihar. Most of them focus on infrastructure building in these two states. So, the allies also being made very happy with those announcements. There is also a clear thrust on job creation with multiple job schemes being announced. Now, these are not just incentives for job seekers, but also for employers. So that's been an innovative innovation that's coming from the Finance Minister. Now, MSMEs too are having it good. Special schemes focused on easy access to credit have been announced for them. And in fact, let's listen in to what the Finance Minister had to say about taxes.
I have two announcements to make for those opting for the new tax regime. First, the standard deduction for salaried employees is proposed to be increased from 50,000 to 75,000 rupees. Similarly, deduction on family pension for pensioners is proposed to be enhanced from 15,000 to 25,000 rupees. This will provide relief to about 4 crore salaried individuals and pensioners. Second, in the new tax regime, the tax rate structure is proposed to be revised as follows. 0 to 3 lakh rupees, nil. 3 to 7 lakh rupees, 5%. 7 to 10 lakh rupees, 10%. 10 to 12 lakh rupees, 15%. 12 to 15 lakh rupees, 20%. And above 15 lakh rupees, 30%. As a result of these changes, a salaried employee in the new tax regime stands to save up to 17,500 rupees in income tax. Apart from these, I am also making some other changes as given in the annexure. As a result of these proposals, revenue of about 37,000 crore, that is 29,000 crore in direct taxes, and 8,000 crore in indirect taxes will be foregone, while revenue of about 30,000 crore rupees will be additionally mobilized. Thus, the total revenue foregone is about 7,000 crores annually.
Now, fiscal prudence took priority as the Finance Minister stated that fiscal deficit target has now been lowered to 4.9% from the earlier 5.1% that was announced in the interim budget.
The fiscal deficit is estimated at 4.9% of the GDP. The gross and the net market borrowings through dated securities during 24-25 are estimated at 14.01 lakh crore rupees and 11.63 lakh crore rupees respectively. Both will be less than that in 23-24. The fiscal consolidation path announced by me in 2021 has served our economy very well, and we aim to reach the deficit below 4.5% next year.
Now, the Finance Minister slashed customs duty on mobile phones. Listen in to what she said.
Mobile phone and related parts. With a threefold increase in domestic production and almost 100-fold jump in exports of mobile phones over the last 6 years, the Indian mobile industry has matured. In the interest of consumers, I now propose to reduce the BCD on mobile phone, mobile PCBA, and mobile charger to 15%.
Now, the Finance Minister also announced a slew of financial schemes for Andhra Pradesh and Bihar. Here are her announcements for the state of Bihar with a view to battling floods over there.
Irrigation and flood mitigation. Bihar has frequently suffered from floods, many of them originating outside the country. Plans to build flood control structures in Nepal are yet to progress. Our government, through the Accelerated Irrigation Benefit Program and other sources, will provide financial support for projects with estimated cost of 11,500 crore rupees, such as the Kosi-Michi intra-state link and 20 other ongoing and new schemes, including barrages, river pollution abatement, and irrigation projects. In addition, survey and investigation of Kosi-related flood mitigation and irrigation projects will be undertaken.
And in fact, to support Andhra Pradesh, the Finance Minister announced that 15,000 crore rupees will be allocated to the state. The FM also said that the funding will support water, power and railway infrastructure, along with the completion of the Polavaram project.
Andhra Pradesh Reorganization Act. Our government has made concerted efforts to fulfill the commitments in Andhra Pradesh Reorganization Act. Recognizing the state's need for the capital, recognizing the state's need for a capital, we will facilitate special financial support through multilateral development agencies. In the current financial year, 15,000 crore rupees will be arranged with additional amounts in future years. Our government is fully committed to financing and early completion of the Polavaram irrigation project, which is the lifeline for Andhra Pradesh and its farmers. This will facilitate our country's food security as well. Under the Andhra Pradesh Reorganization Act, for promoting industrial development, funds will be provided for essential infrastructure such as water, power, railways, and roads in Kopparthi node on the Visakhapatnam-Chennai Industrial Corridor and Varavakal node on the Hyderabad-Bangalore Industrial Corridor. An additional allocation will be provided this year towards capital investment for economic growth. Grants for backward regions of Rayalaseema, Prakasham, North Coastal Andhra, as stated in the Act, will be provided.
Moving on, the Supreme Court has said that there will be no retest for the 2024 NEET UG exam. The Supreme Court said that there is no material to show that the results of the NEET UG are vitiated entirely and that there was a systemic breach in its sanctity. We're now joined by Varun Gakar, who has more details on this. Varun, this of course was a long-awaited judgment. Tell us more, please.
So yeah, the NEET UG fiasco seems to have come to an end as the top court has said that a retest will not be conducted for this year's undergraduate examination. Although it was accepted by the court that a leak in fact did take place at Patna and Hazaribagh, the court said that the material on record was not enough to show that there was a systemic breach in the sanctity of the examination. In arriving at this ultimate conclusion, the court said that it has been guided by the well-settled principle of whether untainted results can be segregated from the tainted ones. In other words, no student who is revealed to have been a beneficiary of the malpractices in this entire fiasco would be able to claim his right of admissions in the future. In addition to this, the court said that
contributing factors to this, considering that the expenditure has also gone up, there have been significant announcements also. So can we get some sense behind that thinking?
So, as you know, we received a larger than expected dividend from the Reserve Bank of India, which I consider a one-off receipt, not necessarily something that can be factored as a recurrent item. But we've also received, through my colleague here, indications that we will also be receiving pretty good receipts on dividends from our public enterprises, banks, etc. So we have taken all of that into account in our receipts projections. Our tax receipts have not been projected as rising. We have kept them approximately the same. So we have used this additional cushion in terms of receipts, partly on certain new items of expenditure, including on some of these new schemes in the direction of employment, which is the central focus of this budget, and partly on fiscal consolidation. So it's a sort of even-handed balance between consolidation and additional expenditure.
There's also a sense that there has been some savings rolled over from the previous year. Is there any figure to that, sir, that is contributing to this, ma'am?
Savings rolled, we are talking about the current year. Now, the current year, what savings will come is not something that I can predict now. And in the last year, there were some savings between the revised estimates and the provisional actuals, but not very large. And in fact, in the case of capital expenditure, negligible. Capital expenditure came out at, in terms of decimal point, it came out at 100% of the RE. Revenue expenditure was short by about 40,000 crores. That's not very significant in terms of such a large budget of 44 lakh crores. So for the current year, yes, there has been some slackening in the pace of expenditure, which is expected during an election cycle. But I still expect that our numbers are broadly realistic.
Before we move on from the sort of fiscal deficit, question, also outlined in the Part A is an indication of a long-term goal in terms of what happens after FY26. So would it be fair that another glide path direction is in the pipeline or in the annual for what happens in FY26?
Though no figure has been stated in terms of a goal for the debt to GDP, there is a signaling of intent which is clear and which you have obviously read in the speech. In the past, our fiscal targets were set exclusively on the basis of flow numbers, that is the annual deficit. A problem with that has been that for countries like India, which are much faster growing than others, and where good capital expenditure itself promotes growth, and so there is almost a circular logic sometimes. It is possible to run a deficit which is not necessarily some rigid number and still have the debt on a declining path. So we are basically moving to a more dynamic targeting, where we say we want the debt to decline. We think our debt to GDP ratio must come down, but we can do that with a more flexible annual deficit number. What the deficit number should be will be a factor of the debt dynamics in terms of prevailing interest rates, prevailing nominal growth rate, and the burden of interest on past debts, etc., our primary deficit. So there are certain calculations which would yield a number. Our aim will be to keep the deficit below the number required to keep it falling at a particular pace. Now, what should be that objective? How quick should it fall? These are matters which will require further, thinking before we come out with anything specific. But the broad direction is very clear.
So we'll ask that question in 6 months' time. The next, okay.
Mr. Somnathan, I'm a political reporter, and jobs and employment was at the center of elections 2024. And today, I think the defining theme of the budget was also employability and also employment. Can you explain to us how realistic is this rollout of this plan? Because you're also thinking of getting the the private sector on board, which I think is a great gesture. But do you fear that there could be some sense of resistance, because this would also mean telling the private sector that this a part of your CSR would go into something like this? How confident are you of getting?
So there are 5 schemes. The involvement of the private sector is, in a sense, passive in the first 3 schemes. It is for people they recruit. We are not directing them to recruit anyone in the first 3, which is the scheme for first-timers, the scheme for first-timers in manufacturing, and the scheme for any employment increase in any sector. So there are 3 parts to it. None of these place any kind of obligation on the private sector to do anything, but they are incentives. Now, whenever we speak to the private sector about investment or R&D, they say, if you give us a higher depreciation allowance, we'll invest more. If you give us more tax expenditure on R&D, we'll do more R&D. So they typically say that they respond to incentives, and I believe them. Yeah. So similarly, if we say that the cost of taking on an employee is something that we are subsidizing, we do believe they will take on more. Now, if you ask me, does it mean that an industry will fundamentally change its technology? No. But every industry has 2 or 3 alternative levels of automation. I mean, most industries you can be totally automated with robots like the Japanese, or you can do some things with human beings and do the rest with machinery. So there are choices which companies make in terms of automation versus labor. And it is economic studies show that such incentives matter. And at the margin, when they have a choice between automation, non-automation, increasing employment versus becoming more robotic, they may make the right choice if there are fiscal incentives. So these are fiscal incentives which would incentivize the private sector to increase employment. And there are studies that show that such incentives work. And the private sector claims that they work when it comes to R&D, or it's a constant demand that give us fiscal incentives. It's just that they have not previously been used to incentives for employment, but this is our need now in the country. So I think these are positive steps, and I am fairly optimistic that the first 3 schemes, even on a purely demand-driven basis, will be successful. Now, we have estimated certain numbers. Let's see. Okay. And they are not unrealistic numbers, let me tell you. I'm fairly confident those numbers can be attained. Now, coming to the other 2 on skilling, one is upgrading 1,000 ITIs in a collaboration between the center, state governments, and the private sector. This will require some very active involvement of certain big private companies, and that's not something where I can say we will complete so many of the 1,000 by this date. That will certainly depend on states coming in. But it's an aspiration, 1,000, and we've made it clear that we are willing to put money behind it. So if others also put money behind it, we've indicated it in the budget speech, 30,000 from us, 20,000 from state in terms of crores, 30,000 crores from the center, 20,000 crores from the states, 10,000 crores from industry. Again, we are not looking forward to a huge amount. It's about 50% from the center and about 16% coming from industry. So I think it's not unrealistic. It's not as if the whole lifting is to be done. Coming to the last one, which is the internship. In the internship, it's important to realize that 50% of India's CSR expenditure, total CSR, the last full year for which I have seen statistics, about 26,000 crores. 50% of that is in the top 100 companies. And 2/3 of it or more is in the top 500 companies. So what we are suggesting to them, and it is voluntary, we have an annexure in the budget speech that gives details. It's voluntary, no one is compelled. But we are willing to pick up the lion's share of the internship direct cost of paying the intern. We are only asking them to use their CSR resources to impart skilling and train the person. This is something which, if a company has to do CSR, which is a legal obligation, if they attribute a portion of their CSR expenditure to this activity, it is something where we have calculated the numbers. The numbers are not unrealistic within the current, if you take, say, 40% of the CSR of the top 500 companies, that is more than enough to cover, in fact, not much more than enough to cover whatever costs they may have to bear to skill so many people. Now, then what happens to these interns? It's not expected that the company absorbs them. Not at all. This introduces young people to new opportunities that they may never have an opportunity to see on their own without a government-backed scheme. Because we are not looking at IIM, IIT, chartered accountant type of graduates here. We are looking at people who otherwise wouldn't get even a look into these companies. And so this, I think, promotes a new connect between the country's need for employment and the employer's need for skills and the government's desire to see that these two are made to come together. So I'm optimistic. Yeah.
Right. So, Mr. Pandey, if you'll allow me, a question towards, in terms of the thinking towards disinvestment. I understand that in the interim budget, we were made aware that right now, maybe not target setting. Let's not hold on to a figure, but rather look at the broad, value chain and the addition that is happening. If we take this year, for example, and while I understand the miscellaneous capital receipts is a amalgamation of even asset monetization and all of that, how would you analyze the pace at which in the first 5 months progress has been made? And as we are staring at about just 6 more months before the financial year is over, how do you analyze that 50,000 crore?
Yeah, so first of all, I think you said it right. If you really look at it to the value creation strategy, now you are not really trying to say that you are getting rid of something. Like you are creating value, which means that, the economy is running and, you have CPSEs who have got an enormous role in this economy and they're producing, energy transition is happening, renewable projects are being put in, so many, so much of capex is taking place. About 3 lakh crore capex is made by the CPSEs every year, from their own resources, not from the government side. There is also, their own businesses, and out of their profits, the dividends go. Dividends go out not only to the government, but also to the millions of their shareholders who have actually come in as a part of our disinvestment. Disinvestment itself is a continuum. You start with the 100% owned company, and then you list it and you bring in certain holders, and you gradually do it over a period of time as you create value. And maybe the last stage is, you could possibly, privatize in terms of, passing on the management control. So I think disinvestment should not be understood only in terms of, privatization. It's much more than that. As I said, we had 81 listed PSBs, PSIZs and CPSEs put together. About 12 lakh crore was their market cap 3 years ago. Today it stands at 73 lakh crore. Market is valuing them because, they're performing, the capex is happening, their management incentives are towards growth, towards return. And in the process of that continuum, while you create the value, you can also derive a certain value, either in terms of the dividend as an annual thing, or maybe you can shed certain amount of shares at the timing of the choice. So therefore, I think the target-driven approach, which was earlier followed, has been now done away with. And this was announced, in presence of FM in the press conference for the interim budget. So therefore, you don't find it in the budget, speech per se. But that's the underlying, the whole philosophy. But still, we are targeting about 1 lakh crore plus, 1.06 lakh crores. If you say 50,000 miscellaneous capital receipts, which includes also asset monetization, which is to be done by various ministries, including Ministry of Road Transport, Highways, and other ministries which are doing asset monetization. And also the dividend from CPSCs. And this does not include the dividend from others. And overall, the non-tax revenue has also played a very important role, as you know, and targeted to be 5.45 lakh crore this year. Right. So this is about 1.5 lakh crore more than the provisional actuals. So it's a very important part of that. Now the question is, disinvestment just tries to fit into this overall strategy. So it is not the disinvestment itself drives it. It is a value creation strategy which subsumes the disinvestment.
Right. Mr. Somanathan, when you talk about angel tax, I wanted to understand, I heard you in the press conference where you said that, there needs to be a balance between attracting investments and also prevention of money laundering. We already have PMLA, we have other laws. What do you think was the rationale behind this, and also what kind of impact will it have on the startup ecosystem?
You're asking about the rationale for the change or for bringing it in initially?
For the change, sir.
No, the rationale for the change is, look, this law has been in place for more than a decade. It came in 2012. And we have looked at how much tax have we collected from it has not been much. Now, of course, one can argue that these are deterrent provisions, not necessarily for collection, but hardly anything has actually been collected. Yes, deterring money laundering is an important objective. But in many of these public policy questions, you have to look at, the primary objective and the, collateral results. So the repeated feedback we were getting is that even though the number of people actually subject to any notice on angel tax was very, very small, there was a fear that, if I get in some money and if that can't be valued according to traditional valuation norms, then I might get, harassed, and therefore would I want to invest. So we came to the conclusion that the balance of policy advantage did not lie in continuing with this provision, but we do have alternative legal means by which we can tackle, cases of deliberate undervaluation or, round tripping, not as easily as with this provision made it very easy and direct to catch that. So it's like saying, look, even on the matter of corruption, there used to be a provision in the Indian Penal Code, but there was also a Prevention of Corruption Act. So both had an offense of corruption. Right. But the Prevention of Corruption Act made it easier to prosecute corruption. Okay. Similarly, it's not as if the only provision we have to catch this is the angel tax provision. There are other more general provisions in income tax. There are some provisions in the Companies Act. So it will not necessarily have to be through income tax, can be through the Companies Act provisions if there are blatant cases of abuse. So we felt that at a time when the country's priorities are employment, investment, and startups are an important way of getting there, let us not do something that affects startup funding when we don't have any, concrete revenue loss stemming from this proposal. So that was it was a balanced approach to what is more wise, even though theoretically there is a case for the angel tax. Theoretical case versus the practical difficulties, taken a practical. But the checks are still the other ones.
So another important topic that was raised in the economic survey was also a concern when it comes to speculative trading. And that consequently one might argue that we do find changes today in the budget speech. My question really is, do these changes right now, do you believe they adequately address that concern? Or is there something that sort of...
People tend to borrow from their own resources to pay for their kids. The thinking, of course, is and look, this is an Indian concept, is that I take care of my kid now, my kid is going to take care of me down the line. Is that wrong though?
I don't think that today's generation thinks like this. Like today's generation who has kids in 20s, I'm saying, wants to live with their children. So here's what it is. You do that and then you're dependent on your kids, or you be selfish and try to figure out a balance, and then you're living life on your own terms. So I think it's really a question of, how do you want to have your future life, right? Where you may not necessarily be earning to pan out.
People tend to borrow from their own resources to pay for their kids. The thinking, of course, is
a study, and it's certainly not yet part of government's policy. It's something that is to be studied, and the chief economic advisor has obviously paid some attention to this. And the economic survey is an important document which reflects some concrete research. Should